the lower difficulty while it lasted. Oil fields weren't really ready for that quite yet. I mean, they're trying to relocate like gigawatts of hash rate, and there's probably maybe like 250 megawatts of total hash rate on oil fields right now. So like it was still a little too early for the oil fields to absorb a good portion of that.
So the next question I want to talk about is cold versus warm mining climates. As you guys are moving to Texas, you guys mine where?
North Dakota.
North Dakota?
Wyoming.
Wyoming. So how is the cold climate affecting your mining operations? What are the benefits there versus building out an operation in Texas or in a warmer climate?
Yeah, I mean, I think it's two sides of the same coin, or roughly. We've seen temperatures as low as like -40, and trying to deal with that is a lot different than dealing with like West Texas heat. I mean, when it feels like -20, like trying to bend cable. We've got some guys here in the audience from our team. I'm sure they can tell you a little bit more, but it's not fun. Last trip I was up there, I was trying to like get this piece of Velcro on insulation on a pipe over. It feels like -20, and I just gave up. So.
Yeah, and from our perspective, obviously cold weather climate. We're oil and gas guys originally. I'm a petroleum engineer by background, been in operations my whole career. And so working in cold environments for oil and gas operations is something that we're somewhat used to doing. But as far as Bitcoin mining goes, the biggest thing, obviously, we use natural gas similar to Great American Mining. It's not so much you're worried about your ASICs. The ASICs are getting great runtime in the cold weather, and they're performing very efficient. It's keeping your natural gas flowing, keeping your generators online. And so it's definitely, taking lessons learned from oil and gas operations days, making sure that you can keep your equipment online. And so we definitely welcome the cold. We prefer it over the heat, absolutely.
So it's been nice and simple for us being 100 miles from the Arctic Circle. So we know about that cold weather. And the nice thing about Sweden is it never really gets hot. So in Quebec, we can get a couple of very hot weeks. The same thing in New Brunswick. But otherwise, functioning in cold weather is a different paradigm, both ASICs or GPU chips, it doesn't matter. But coming into Texas, we know that other people have come in and they're building out and they're doing liquid coolant. We were at the conference last week in Houston, and I was so surprised there was 5 executives from Exxon, PhDs, computer science, all coming in about Exxon and their liquid coolant and how they can basically help this industry. So we think by the time we build out this time next year, which will put on about an extra 3.6 exahash, in Bitcoin mining, that will perfect whatever that technology is. But most important for us has been Intel. Bringing Intel into this space, we have to maintain a green footprint. So that's a key part of their decision in coming up with these super new machines.
So when it comes to maintaining a green footprint, the REC credits, do you guys get REC credits for the mining energy you're using, and do you guys retire that at Hive?
Do we get the what credits?
REC credits, renewable energy credits.
We're not getting renewable credits from Sweden or Canada as of yet.
Awesome. One of the questions I have for the natural gas guys is how has natural gas prices affected your operations with the dramatic increase? And it's definitely affected the grid pricing across the Midwest.
Yeah, I mean, right now we have all fixed contracts.
Okay.
So we're not buying off a pipeline. We're straight at the well site. There's really no other use for that gas. They're literally just flaring it. So it's kind of whatever price we're willing to pay. And there's a lot of gas to go around, so.
Yeah, and similar to echo that, but one of the things that I think it does help is, a lot of people were, at first, as natural gas prices going up, were, talking about the negative aspects of it, but I kind of look at it as it's now allowing oil and gas companies to have additional revenue within their portfolios, and so ones that were potentially afraid to get into Bitcoin mining or having a hard time finding capital to want to go towards it, I actually think it's going to be good for the oil and gas industry to continue to adopt Bitcoin mining and start bringing it in as they're having additional revenue coming in. So we're welcoming it.
What I'll say is in the SPP market, which is in the Midwest, we're seeing the natural gas prices increasing are affecting our utilities like OG&E too, because their fuel cost was over $170 million more than what it was last year. So raising those prices by almost $0.015. They used to have a great rate at 3 cents. Now it's 5 cents. So we're seeing the Midwest and people that didn't hedge, and most utilities don't hedge their natural gas exposure, is making it very, very hard to get gas or to get energy prices under 4 cents. So expect hosting rates and capacity constraints to continue throughout this bull market.
So one of the parts of mining in Sweden is a very developed hedging market. So last year we locked in for this year 3 cents, the year before it was 2 cents electricity. And it's a touchdown pass away, the hydro dam, literally to get that beautiful green energy coming into the facility. And now our vision is to build out greenhouses to take that hot air and become the cucumber king of northern Sweden.
Cucumber king, I love it. How did you become the Intel mining king? Like, what was the process of bringing Intel into the mining space?
They reached out to our President Chief Operating Officer because of our green footprint and ESG strategy, and they wanted to make sure that there was less blowback and negative feedback coming to Intel, coming into this space. Aiden and Gabe, our counsel, I believe they're in the room here, they did a phenomenal job of negotiating and also with the OEM so that we should start getting machines in May. And so we're very thrilled about this whole journey. It's less expensive, much less expensive. It functions like an S19 Pro. The whole payment structure is much easier if you're a crypto miner. And we found this the same thing in the GPU chips. We don't have to give someone 50% of our money and wait, and maybe there's delays in getting the equipment, et cetera. It comes in a very fluid mechanism for us, so we can manage our cash flow. I believe that this industry has to function like frackers. You always have to be drilling to maintain. You take 20% of that cash flow and always upgrading your systems. Otherwise, you'll have 1,000 barrels, and then a year later it's 50, that decline rate. We have the inverse of that is the hash rate difficulty rising. So we always have to be upgrading and having that sort of discipline. When the mechanism is that you basically, the machine is ready and you can pay for them, that you don't have to do all these lump sums and then speculate when the machines are going to come, really helps you function like a great Texas fracker.
I love it. Love the analogy. Alex, this is over to you on the software side. With What River Financial is building, trying to bring Bitcoin mining to consumers, can you talk more about how that journey has been and kind of any challenges you've run into, either on the co-location side or on the software side?
Yeah, for sure. So for those of you who aren't familiar with River, we have this all-in-one solution. We started as a Bitcoin brokerage to make it easy to buy, sell, and secure your Bitcoin. We decided that Bitcoin mining would be a very compelling product offer to our customers and have Bitcoin mining natively sitting in this app, this financial institution. And so the way our product works is you buy physical miners directly from us. We manage the hosting for you, and we manage all of the end-to-end supply chain and all the repairs and complexities. As that miner is mining, we put the Bitcoin directly into your River account. We abstract away the concept of a mining pool and all this stuff. Now, the big challenge has been scaling up Bitcoin mining is a lot different than scaling a Bitcoin brokerage. There's all these real-world implications, as you guys are intimately aware. There's supply chain risks. There's what kind of uptime guarantees can we promise to our clients? Who do we choose to partner with for colo facilities? There's all these implications when it comes to promising uptime, timelines, energy sources, prices, and it's a really it's been a whole nother ballgame for us, so we've had to learn very fast, but things are going very well. The space is maturing very quickly, and there's more increasingly more sophisticated players like you guys, which makes our lives a lot easier. And very bullish on retail mining in general. What you guys are doing at Mining Store is also amazing, and I think retail mining is going to be an incredible industry in the United States.
Definitely agree with you on that. With Mining Store, when the retail mining channels were putting together, we were able to drop the cost of getting into mining to $100 through the Reg CF framework and working with influencers to start their own Bitcoin mines. Next question I want to talk about is strategies you guys have for reducing costs and scaling your operations in the next 2 to 5 years. At Mining Store, we're working on looking at stranded wind assets and mining behind the meter in regulated markets such as SPP, where you can get energy half the time from the wind and half the time from the grid.
Yes, I'll speak to kind of what our thoughts are. So at J Energy, we're, like I said, we're oil and gas guys, and we're really trying to educate the oil and gas space on the potential asymmetrical risk that Bitcoin mining can bring to their portfolio. So when you think about it, if you're just purely a Bitcoin mining only company, you're beholden to an energy producer, whether that's oil and gas, whether it's utilities, you name it, you're a purchaser of energy. We're of the opinion at some point in the future, there most likely won't be Bitcoin mining only companies, because the energy producers at some point are going to realize that they can bring that into their house, utilize their own energy. And when you think about it, when I say an asymmetrical risk, it's that they already have a sustainable business model. So think of an oil and gas company. They sell their oil, they sell their natural gas. Well, now if they bring Bitcoin mining in-house, they don't need to sell any of their Bitcoin if they build it to a scale that basically their portfolio can withstand. So they're selling their natural gas, they're selling their oil. Well, now they can cover their expenses of their Bitcoin mine. And now when you compare them to a Bitcoin mining only company, their actual power price isn't necessarily as important as a pure Bitcoin mining only company, because they can basically subsidize their Bitcoin mining costs and expenses with the rest of their portfolio. And so we're really trying to educate the oil and gas industry that this is what they should be thinking of, is that, you know, you shouldn't just be an oil company, you should be an oil, gas, and a Bitcoin company. And once you know, oil and gas companies, energy companies, utility groups really start realizing this, that they're ultimately going to be the most competitive when it comes to Bitcoin mining, can withstand downturns if difficulty gets too high, hash price index gets too low, you know, I think that's going to be the big shift in the industry at some point in the future.
Yeah, I honestly don't think it's too far away. I think we're like in the beginning of like a pretty good cycle for Bitcoin in general. In the next cycle, we'll see a lot of those power producers start doing this in-house or hiring companies like us to do it for them. And I think it just all comes down to vertical integration, which is what Ryan was talking about. Yeah.
The one thing we've seen is that power producers, when they come to the table with their energy asset, they usually want some upside. And it's like, well, now my energy cost isn't 3 cents, it's 6 cents, 7 cents if we're splitting the profits and you're not putting up the capital. So there's definitely going to be an education of getting the energy producers to understand that their asset is a commodity, and that the Bitcoin miners with the chips and having access to those are the most important piece of the business. That's what generates the Bitcoin. Without that, you don't have anything. Does anyone have any other comments they want to make?
Our strategy is always been mining with Ethereum and hodling Ethereum and trading Ethereum. So last year we hodled Ethereum and it was up 300% and Bitcoin was up 80%. So we made much more, but I know the Bitcoin maximalists can't stand this thing because it's going to go proof of stake, and I just don't think that's proof of BS. I just don't think it's going to happen for a host of reasons, and that's not what's relevant. What's relevant is that we mine for 75 cents a kilowatt. That's our revenue.
It's revenue.
And our cost all in is a nickel. So that is called a 90% margin. And that is a very beautiful, enriching margin that allows us, even though it's more volatile, to turn around and build out our Bitcoin presence and our footprint. So we will continue to mine Ethereum. We have another vision that we're building out for high performance computing, which is even more profitable as the digital world expands and the need for independent data centers. But really it's important for us is that mining Ethereum, we can sell, we take the profits, all of a sudden we fund Intel. And then Ethereum will correct, we'll remine it, we'll build it up, it'll have a big pop. It's always 2-to-1 volatility to Bitcoin. It's like silver is to gold, so we'll trade it. But Bitcoin, we hodl. We put it away. I'm a big believer in those virgin coins. I'm a big believer they're going to be like Andy Warhol original prints. And they're going to have always the fungibility, but if you have the original Babe Ruth baseball card, it's worth a lot more. So that is my long-term vision of having a big bank of Bitcoins.
Well, thanks for sharing the portfolio management strategy of Hive. How does River Financial manage their portfolio, either for their clients or for yourself when it comes to mining?
Yeah, so we're quite different than most of the other companies in that we sell our mining hardware direct to our clients. Our clients, at the end of the day, are the owners of the machines. We don't keep a whole lot of equipment on our balance sheet directly. Most of the items on our balance sheet are actually sort of long-term procurement of co-location facility. So we're helping effectively finance new co-location facility constructions so that we know we have capacity to host our clients' miners. That said, we do maintain some miners on our balance sheet. Most of that is for providing sort of the best experience we can to our own customers. Let's say sort of there's a miner shipment delayed, we can sort of hand existing miners that we're running on our balance sheet off to our clients to offset things and provide a better experience. So most of our complexity comes around long-term procurement of colo facility space and planning that out and sort of making sure our cash flows are all where they need to be to do that properly. And then we are procuring the actual miners and the hardware sort of on shorter term intervals to fulfill the demand from our customers. So we're sort of matching customer or sort of retail cash to build out mining capacity, whereas a lot of people in this panel are sort of getting institutional cash to do that.
Yeah, I mean, unfortunately right now, we've been selling a good portion of our Bitcoin just to fund operations. And we've had a short-term view that hash rate plugged in is worth a lot more than Bitcoin on the balance sheet. We obviously aspire to get to the point where we don't have to sell any, but we've so far still been bootstrapped to the point where we're at right now. So that's why we're doing it.
Yeah, and similar echoes here. You know, we try to hold everything that we can. If we can hold, you know, basically whatever we can, we'll hold. But similar to Todd is that, you know, even with our generation assets, we don't we rent them because we'd prefer to put all money towards ASICs basically, because
Yep.
you know, an ASIC makes you money, a generator just allows you to spend
Just
money.
gives you problems.
So now the next topic I want to talk about is containers versus data center or building infrastructure when it comes to mining cryptocurrencies. The scale, the speed, the reliability, the mobility of those. We'll start with you because of the new Texas facility that you guys are looking to build in the warm weather. How have you approached that conversation?
Well, that'll be with containers.
Containers.
In partnership with Dave Perrell. In building out in West Texas. I believe we're looking at Lubbock in that region. But for us, it's been basically building data centers, which we have throughout Canada, Iceland, and in Sweden.
And what have you guys seen in running operations in data centers? What are the advantages compared to containers if you've done that analysis?
I think you just have more control, and for what I can see, for us is to be able to have more control. Everyone, especially when it's cold weather, you have one-in-one facility. No one wants to walk outside when it's 40 below, and so all your machines are basically protected. So I think from that end, we prefer that. Now we have some people that have containers near us, but we're much more, I think, productive, and we have the highest efficiency ratios of all the other crypto mining companies that are public, and I think it's because of that sort of discipline and strategy we have.
I would say the same thing for us is that when we build data centers and we build the actual buildings, the amount of technician space that's available and the quality of life for the technician working on these mining facilities, usually 24/7 depending on the scale, is improved by that infrastructure and the ability to work in a warm environment, which you take for granted being a trader or being someone who's managing a mining company and not actually in the facilities every day. For you guys, how are you approaching container versus building infrastructure?
Yeah, so we build all of our containers in-house in Casper, Wyoming. We take the container approach, obviously, over the data center approach because we're also chasing, natural gas. And if you think about the oil and gas industry, is that the majority, predominantly of all natural gas, especially if we're setting it up on certain clients' locations or if it's chasing flared gas, is that that natural gas is on newly drilled wells, and typically the reason that gas is being flared or lit on fire is what you've seen. The reason that oil companies are doing that is that typically their midstream infrastructure or their facilities haven't been set up yet. They just went out and drilled the well, they completed it, brought it online. They're still building their facilities, requiring the data on it to see how big does their facilities need to be to handle the well production, et cetera. And so you typically have a certain amount of time, depending on which state, some are more strict than others, as to how long that well can actually be flared for before the gas actually has to go to sales. And so, trying to take advantage of that, you need to be nimble, you need to be able to have an approach to pick up your operations and move it to the next site, because these wells are on a hyperbolic decline, so their production rapidly changes and decreases. And then not only that, like I said, nobody wants to drill a well that they can't put their gas to sales. The whole goal is to put your hydrocarbons to sales. And so the reason that gas is being flared, like I said, is that they typically don't have their facilities done yet. And the long-term goal is not just to continue flaring. While there are exceptions to that rule, it's just that's not the overwhelming majority of sites.
Yeah, I mean, we typically try and pick off sites where there's some other reason why a pipeline will never take the gas to that site. That's been a good target for us. I think Crusoe, who also mines Bitcoin in oil fields, they target the newer sites that have just been drilled. We're targeting sites that are a little bit further down the decline curve where it's a little more steady, and we could be there for probably 3-4 years per site. We do have a view, though, that all of our hash rate should be mobile. So about 6 months ago, we started mounting them on trailers, and that's for oil and gas fields, other pockets of energy that we can find that is otherwise stranded. And in terms of like a data center versus a container, I personally just really like the idea of solving a problem once inside this container versus like each new data center we'd theoretically set up having to solve it different ways with how the air flows and all that kind of stuff. So having this controlled environment, I think has been really beneficial for us. We've iterated our design probably like 4, 5, 6 times just in the last year, and going from like 1 container to I think we've got 27 live now in the oil field, and we build them down in Ponchatoula, Louisiana.
Can you talk more about the decline curve when it comes to oil and gas mining?
Yeah, so I mean, what we try to do is just target like, some spot where we're going to be probably still okay about 2 years out. It's tricky. It's more an art than a science, I guess I'd say. So, and every well is different. So.
Last thing I'll add on buildings is for us at Mining Store, we've developed a 50 megawatt scalable steel structure that can be put up in 6 months. The longest lead time items are the switchgear right now. I think most switchgear companies are out plus 20 plus weeks. It seems like everyone bought transformers 3 months ago, but everyone forgot to buy switchgears. But that's our plan of scaling and moving forward in the industry. I'm going to go over to you, Frank, regarding going public versus private markets. What's been the experience of a public mining company, the first public mining company, and would you do it again?
Well, it was crazy at the time because it was the first. I was trying to launch an ETF. I have the JETS ETF and did Go Gold, Go AU, and was trying to come up with a Bitcoin and recognize that the regulatory world was not going to let one happen due to the concerns of anti-money laundering laws. So all this research sort of going nowhere, and so well, once you get into crypto mining, in fact, you mine those virgin coins and you can save them so you don't have an AML issue. And so this became the proxy. And then Riot went public in the US, and then Hut 8 went public, and there's other people follow with that. It was an incredible ride as an investor. We tracked 92% of the time with Bitcoin prices, and it used to be by the day. It's now by the hour. Bitcoin's up in the morning, we're up 7%. Bitcoin rolls over in the afternoon. All of a sudden, we're tumbling down with it, and that's happening with all the crypto miners. It's like watching kids play soccer. They all follow the ball, and so I think the capital markets was a wonderful way because we became this sort of proxy. Right now, it's bizarre, but private deals are more valuable than public deals. If you take a look at our PE ratio, our cash flow multiple, our revenue multiple, NVIDIA's are much more expensive in that sort of proposition. So I think going public today, there's now over 20 miners, it's becoming more crowded, but I have lots of capital market experience, so it was easy. I know this from the mutual fund and ETF world. If you're first, and you're the first to come up with a theme, then you get shelf space, you can scale. You can scale $1 billion in assets in that space. So Hive was fortunate to be first, so was able to scale. Fidelity immediately gave $100 million. Other institutions gave another $100 million right out of the gate. So it's been a great ride, the fact to launch your rocket.
Ryan or Todd, do you have comments on it?
Yeah, I mean, obviously can't speak from the public space, but we would be completely open to companies that want to give us $100 million because we've got no shortage of assets that we could go after. So, my business partner, Justin Ballard, he spends a lot of time on the BD side, the raising capital side for us so that we can execute on a lot of our projects. I spend more of my time on the operations side, so I can't speak to it as much. That would be better conversation for him, but like I said, I think that the grass is probably always greener on the other side where you hear Frank make a statement like that, and I'm sure it's not as easy as he's making it seem. So, but we'd be definitely open to that kind of an opportunity for sure.
I mean, likewise, if anybody out here has $100 million, I do have some.
Yeah. We can go 50-50 on it too.
I mean, from my standpoint, we've been just so focused on our product and getting that right. And we are getting to the point where we're ready to scale. But it's been all about the container, the trailer, making sure it works perfectly, so that we can, keep cranking these things out and not having operational issues in the field. So I think it'll be a big year in general for Bitcoin mining and for folks like us. So,
What advice do you guys have to the new energy entrants coming into the space, either oil and gas companies, energy companies, just new Bitcoin investors that are looking to get exposure to mining and maybe running their mining operations for themselves or at home when it comes to the operations?
I mean, I would just say, like, don't be scared. Like you hear about stuff Frank was talking about with Intel, like you've got to have a green footprint, all this stuff. Like, it seems like everybody's worried about upsetting people. And it's like, just, get some hash rate live, get started, do something, be a first mover. So many of these companies have the money to do it. They have the, the talent to do this as well. It's like, just go, get off zero.
Yeah, and from our perspective, like I said, our goal is really to educate the oil and gas industry on the potentials that they're sitting on. And I come from an oil and gas operations background, and it's drilling wells, completing wells, bringing them online. What we've done in the offshore space. Like NASA pulls oil and gas guys because there's not a problem that they can't solve. And so I don't want to demean or downplay Bitcoin mining at all, but the biggest thing with oil and gas guys trying to get into it is they're overwhelmed by it, and they don't know how it works. They don't care, don't want to learn how it works. They're afraid of it. It's just something new. It's a very conservative industry. And so, we're just really trying to say, like, look, guys, the things that you do every single day and the problems that you solve and the safety considerations that you have to take into account and just, the engineering of it, it's like Bitcoin mining doesn't hold a candle to what oil and gas does on a day-to-day basis. And this is something that fits so complementary within your portfolio that you absolutely should be adopting it. And so that's something that we're just spending a lot of time trying to educate people on.
Yeah, and like I think there are, these companies really are coming around. Like, there was a reasonably large oil company exec suite visiting one of our sites like a month and a half ago. So I mean, they're talking about it in the boardroom.
Yeah.
They're really starting to look at this stuff for sure.
How do you guys find mining sites at Hive?
Sorry,
How
pardon
do you
me?
find new mining sites, like new mining locations, cheap energy, if you?
So it's a team approach, and we're focused on trying to stay lean. That we're running now about $12 million of revenue per employee. Goldman Sachs is $1 million, so we want to make sure we have that high efficiency ratio, and therefore strategic relationships that we have are very key. And that would be for us in Europe is Barrage. Some of the team members are here. They've built all over the world. They manage their facilities for us in Sweden and Iceland. So it's having those relationships, always looking and hunting for energy. Dave Perel, he's also building out, and he's on our board. So he gives us other insights, and we can go to him. I think your relationships are so important.
Alex, with you guys in ensuring that your customer has a great experience, how do you choose co-location partners? How have you gone through the process? You mentioned you need to put up capital. How do you choose the right person to invest in so the lead times that you get are the actual ones and you can promise those delivery dates to your clients and make them?
So reputation is a big thing for us. We have a few high-level criteria. We stick to the U.S. for now. We're trying to stick to like very safe jurisdictions where we know we can easily enforce any agreements that we have set up. The more exotic we get, the more risks that just introduces, even if it's a cheaper power cost. If something goes wrong, for example, in Venezuela, right? Like, what are we going to do if the miners aren't online? Sue somebody. So, we try to stick to very safe geographies, and then reputation is a big factor for us. So we do reference checks on anybody that we partner with, talk to other customers. Look at historical execution, and then we have a pretty big due diligence checklist that we've operationalized, and because at the end of the day, any co-location partner is basically any problem that they have is basically our fault in the eyes of our customer. Yeah. So we're very, very thorough about and very, very picky about who we work with.
It's definitely important in order to scale and maintain the brand reputation. Todd and Brian, do you guys have clients, retail clients, or are you all self-mining?
Yeah, so we did a deal earlier in 2021 with Fortress Blockchain, which is now Cathedra. And so we have it's not really a hosting deal though, it's more like a partnership deal.
Yeah, we have basically two aspects to our business model. So one, we are a self-miner. We find our own sites, put our own equipment out there. And then the second one is, we have our own construction, like I mentioned, where we build our own containers in Casper, Wyoming, and we, try to work deals with oil and gas guys. Like I said, we're trying to educate them and say, here, you can invest in your own containers as well. We'll help build them for you. We'll bring them out to your sites, and basically it's like a management fee or agreement for us to help them operate it, or at some point turn over the keys to them so they can fully bring it in-house. And so there's kind of two aspects to our business model and how it is. It's self-mining plus, helping oil companies do it themselves too.
I think coming to events like this are really important. I know that Aiden Killick, our President and Chief Operating Officer, I've been getting him for the flight from Vancouver to get down to Texas. He's been at several events because Texas is where we're going to double our capacity. And you go to the events like last week, it was just a great experience, 1,500 people and complete different stories and how you hook up gas. And Bitcoin's easy compared to drilling dry wells and blowouts, et cetera. And the sort of entrepreneurial spirit of Texas. So it's seeing that, but you can't see that sitting behind your desk in Canada. You're not going to see it vice versa coming to Miami now. Networking, building relationships, getting industry information. There's another event earlier this year in Austin. No one expected that to be a success, and it was basically a sellout. But for us, for Aiden and myself, it was just great of getting information regarding the great nation of Texas and its vision of becoming the center where they want to say get rid of the petrodollar, which we heard last week, and it's going to become the electric dollar for the global economic scene. So it's coming to these events are so important, I think.
I definitely agree with you. I think that's the last question I want to bring to the board, to you guys, is mining content. What is your strategy at River Financial and for you guys when it comes to mining content, educating? We've talked a little bit about educating the oil and gas space, but really educating the community that your mining operations are in, what you guys are doing, that there's no harmful emissions, stuff like that, and even getting retail into the industry.
Yeah, so a big part of our content strategy is educating retail. We've had a pretty successful content strategy already, just in Bitcoin in general, or river.com/learn. We have a lot of great content about how Bitcoin itself works, how Bitcoin markets work. So we're continuing to invest in that and bringing that to mining. So expect more there in the near term. And then we have some other stuff in the works.
It was a big shocker last year. We have first out, strongest ESG strategy, green only, et cetera, and Elon Musk comes out about carbon and coal, and all the stocks fall down. And we were really frustrated with that. Why wouldn't we separate from the pack? And so we said, we've got to get into this education. And so I joined the Bitcoin Mining Council, and we did things for education. We took Michael Saylor's presentation of 30 minutes, and we distilled it to 3 minutes for the attention span for a lot of investors. And then we put it in French, in Swedish, it's in English, and it's in Spanish. Why? Because in Sweden, we get regulatory bodies or people come out with FUD. So we can turn around and give them, here's 3 minutes in your dialect. In Quebec, it has to be in French, and so we make sure we spread the news so about this industry and how smart it is and how it's functioning. And now it'll be the natural gas, the opportunities of using solar and wind, and where you're on the grid and how you can use natural gas during sort of the volatile energy flows. How do you sort of make them nice and flatline? So it'll be continuously educating.
Yeah, we spoke to already about the education of what we're trying to do with the oil and gas companies and why this makes sense for them to bring it into their portfolio. Another part along the, at least the content or the education side, I am personally, and other members of our team feel the exact same way, is that we're not beholden to one type of energy source. There's a lot of Bitcoin maximalists in the crowd, and while I definitely identify that, I identify as an energy maximalist prior to that. At the end of the day, all forms of energy bring prosperity to people. And coming from the oil and gas industry, we've faced a lot of the ESG, anti-oil and gas rhetoric numerous years prior to it even being labeled ESG. And so a lot of our education also comes into, if you're going to say this form of energy is bad and point at one, I'm going to tell you why the form that you're saying is also bad. You know what I mean? Energy is nothing but brings human flourishing and prosperity, and it's a big part for us to educate why oil and gas is good, why coal is good, why natural gas is good, why wind is good, why solar is good, why hydro is good. I can point to everything, but like I said, if you're gonna throw rocks at one, I'll throw rocks at all of them. So
I love it. Yeah. Bitcoin mining is energy well spent. Yeah. Simple as that.
100%. Yeah, I mean, like before Bitcoin mining, candidly, I really didn't have an appreciation for what happened after I plugged my phone into the wall. Like, I didn't understand what it took to actually get that energy there. And since going down this journey, I've learned quite a bit, and most especially about the oil and gas industry. And I think it would be, behoove a lot of folks in this country to get a better understanding of what they actually do up there, and down in Texas as well, and give these folks a little more respect. They're doing real hard work, great work for our country. And for us on the education side, it's been really more just like Ryan was saying, with the oil and gas companies directly, the guys on the ground. I mean, you'd be surprised how many roustabouts know about Bitcoin and love what they're working on with us there. And then there's always a certain crowd that you're never going to make happy. Like, well, we're mitigating a flare. Yeah, but you're helping them stay in business. It's like, well, sorry, we're solving a problem, so go somewhere else.
Well, thanks again, guys, for jumping on the panel. We appreciate it.
thank
Thank
you.
you.
Great job.
Such a step.
that's a terrible picture. Yikes.
They zoomed in on here.
Yeah. Don't, just turn that off. That's.
Our company came about. We were trying to create jobs in the Rocky Mountain region, and we think this is the best way to do it.
The Chegsit, I like that. It's the first time I've heard that branding. I guess for those who might not be familiar, I think that refers to the great hash rate migration from China after the regulatory changes in summer of 2021.
But I guess we're calling it Chegsit?
Chegsit. Griffin Habbey, we'll give him that.
You heard it here first. Okay, I guess let's maybe start at the beginning when we think about the history of Bitcoin mining. Marshall, you've been here the longest. OG BTC himself. I think you started in 2010. I mean, just tell us about what it was like when you first started getting into mining and how you've seen it change.
Sure, like when I first started mining, I didn't actually know if it was legal. Because like in the Constitution it says, oh, you can't make your own money. And I'm like, don't know what I'm doing. So I was very quiet for a long time. And, mining on a laptop, and it was purely this is a cool nerdy thing. Oh, my graphics card and CPU can make nerd money. It was very much the reason to mine early days. And then, it was just a purely nerdy endeavor. And then after that, we moved to graphics cards.
Actually, could I interrupt?
Yeah.
So when you're saying, you're doing some money printing yourself, what exactly did that look like tangibly? Like your first mining setup, what was the infrastructure? Where were you doing it? Mm-hmm. Where was the power?
It was a laptop and a desktop in my apartment. And there was no great tooling, no good software. It was just, I mean, you couldn't watch YouTube to learn. It was just bashing your fingers on a keyboard and rolling your face around till you could kind of figure out, Stratum, the mining protocol wasn't a thing. You had to use Gitwork proxies and all these other, you couldn't even use a pool at the time. So thank God Slush launched a pool because that made life a lot easier.
And if it was so, just like, call it jerry-rigged, I guess, you're just using your laptop, where did you even first get the idea to mine Bitcoin?
Sure. A friend of mine, we had lunch. We were working on an iPhone app at the time. He was like, dude, I was checking out the deep web last night and I found this thing. I was like, okay. He's like, it's like math problems with your computer and it makes like these nerdy blocks that you can send to other people. I was like, that sounds awesome. And that's just kind of like how it started. And then graphics cards began to be like the main thing to mine. And I would get on eBay and I was so short-sighted. My only goal was, I was a gamer, huge gamer. It's like, oh, I can buy graphics cards from Craigslist for $500, $1,000, and I could pay them off, and I'll just have hordes of graphics cards for free. That was the short-sighted initial ramp up. Max the power off in your apartment until your girlfriend says get out because she can't plug in a hairdryer without nuking the whole apartment. A building manager complaining that the people living above you can't cool their apartment. So those are the early growing pains.
What year is this GPU transition that you underwent?
Yeah, so from 2010 and 11, it's mostly like whatever you can get a hold of, and then a lot of people on forums and stuff started making the drivers for graphics cards around late 11, 12, and then into 13, FPGAs had a very short stint. And then on into ASICs in 2013 pretty heavily. So yeah, the early days were very much don't get kicked out of your apartment, don't get divorced. And even now, my wife has PTSD from fan noises. So when we moved to our house in Houston a few years ago, I tried to just like plug in a box in the garage. She was on the other side of the house and she heard it and she's just like, not again, no. So it was a whole, she has PTSD from
So question for you, how much of home mining strategy, because I know it impacted me, how have wives of nerdy Bitcoin miners over the years affected home mining strategy?
They force scale, I would say.
I think the entire immersion industry has wives to thank for wives and kids.
My wife literally started a Facebook group called the Desperate Bitwives.
That's great.
Not kidding. It's still a thriving community now. So if you're suffering PTSD, you check it out.
The real MVPs.
Yeah.
One last question before we transition to this next stage. So call it 2012. 2013, when the first ASIC comes out in 2013, step change in efficiency. Can you bridge the gap from say 2013 to say 2017?
Sure.
Which is when most people maybe started getting more into mining over in an industrial way.
So in the very early days, we're running on like very inefficient process nodes that were not industry standard. So you had Butterfly Labs, I think, was a 64 nanometer chip, and it was like every 3 months something new would come out. And so it was very much an arms race. And you get really good at timing the market, timing the development cycles, getting to know everybody so you can get the new stuff and then sell it before anybody knows that the new stuff's even out. And now it's much less psychotic, for better or worse. People think a 2-year release window is really hardcore now. 3 months was nosebleed at the time. So that's like the main shift beyond the technology. It's just like the release cycles and the iteration improvements come a lot less frequently, thankfully, so you can scale a lot better.
And for background, for people who might not be as familiar with the history of mining, I think it is those quick release cycles, among other factors, that led to China dominating mining for so long, because if there's a 3-month, call it useful life of a machine before it's far less efficient than the current generation, having it shipped across the world is far less competitive than finding somewhere to plug it in locally right next to the source of this hardware.
Early days, even if they would ship them, the customs guys would take them out of the box, mine them for a month, and then put them back in the box and ship them. So, You weren't even fighting manufacturers at that point. It was just like customs guys. Oh, it's stuck in customs. I don't know.
It's a real shame.
Yeah.
All right, I guess let's take it to this next phase then. Mike, when did you first start getting into Bitcoin mining? What did the whole industry look like at that point?
Yeah, so I got into it in late 2016. I got orange pilled by Trey, our CEO and founder at Grid. I came into it from the nerdy aspect. I didn't come into Bitcoin from like the economic policy or fiscal policy or freedom. I came into it because like I said, I was a chip designer, nerd to the core, and it was just super fun to take. There was still some GPU stuff. I don't think I'm allowed to say the other things that I was doing with the GPUs at the Bitcoin conference, but so I had a couple of S9s at the time, and home mining was still a big deal. And in fact, cloud mining, we haven't even really talked about. The cloud industry was still pretty prevalent in 2016. Having to go write a $50,000 check and not seeing any of that hash go live for 8, 9, 10 months, and so that's sort of where the industry was. There were still a lot of home miners. There's still even more now, but it was definitely more seemingly a sort of a home project, even into 2016 and 2017.
Makes sense. And so then you joined. When did you join Grid again?
I joined Grid in 2019.
2019. So I'm curious, in those, how have what you've seen as an industry, like how has the industry changed from when you say you started and were familiar with Trey and what he was doing in 2017, 2018, 2019, fast forward today, you all just went public in the last 6 months via SPAC, a pretty large SPAC at that. So what was that evolution like from your point of view?
Yeah, I mean it's been a heck of a wild ride. I too had my home set up and my wife harassing me about the heat and the noise, and sort of transitioning from that sort of home mining industry. I mean, I think the primary areas where things have changed. You've got custom firmware that unlocks all sorts of new things, and really just the entire software ecosystem, the proliferation of all the different pools, different payout methods. You've got like I said, the software support infrastructure managing these devices. Obviously, ASICs are a whole lot easier to manage. They're a lot simpler than sort of the GPU rigs, which are at least for me a spaghetti mishmash of 15 different brands, and some from China, some from local OEMs, and so it's sort of this entire industry is sort of streamlined as the ecosystem around it has grown. Not unlike Bitcoin in general, with Lightning and all the layer 2 protocols and all those. So it's really just been a broader ecosystem of support to make it more available. And then of course you have the geopolitical narrative around ESG and green energy and renewables and the intermittency. And so the sort of intersection of energy and Bitcoin mining coming together has been, I think, a big shift over the last 2-3 years in driving that base load that helps to subsidize and incentivize development of alternative energy sources. So yeah, it's been a super interesting path and journey over the last 2, 3, 4, 5 years.
Yeah, and I guess you also have really seen firsthand the change in hardware over that useful life. I mean, I think that's kind of a common thread here, is as the hardware is changing over time, that's just changing the way the whole industry works. Obviously, you guys are at the frontier of that perhaps next phase of hardware evolution, with Intel now producing Bitcoin mining chips. Last question before we go to Amanda and maybe look more at the future and kind of the current state of mining. What was it like in 2018, 2019, when you started? Yeah, I guess your relationship with hardware is very different when you were first getting into it than Marshall's. How has even just that hardware market changed over the last 4 years?
Yeah, no, that's a great question. I mean, I think it's been interesting to see both the longevity of the S9. I mean, S9s are still plugged in and still, I mean, was it 2014, 2013 when S9s came out, and they're still running the death of the S9 has been, forecasted. I don't know how many times.
It's died almost more than Bitcoin.
The prophecy long foretold.
Yes, the S9 unplugging, or I don't know, whatever you want to call it, but yeah. So I mean, I think it's been interesting with how the original sort of form factor, the tube, the shoebox form factor, has, I think interestingly hasn't evolved as fast as the actual underlying technology inside the chips and just the silicon technology, getting down to 7 nanometer, now 5 nanometer with some of these chips, the XPs and some of the Bitmain stuff. And I think we're starting to see more of a, as the industrial scale mining has grown, those form factors start to be a little more challenging. And you're starting to see alternative, folks like Marshall and those guys doing, large scale immersion to, minimize some of the heat, the heat impacts, especially as the technology, as the semiconductor stack has gone down in size, they become more sensitive to temperature and environmental factors. And so we're definitely seeing that shift to both more of an industrial scale form factor, industrial scale options, but at the same time.
Intel box look like? Please do tell.
Marshall fishing from MPI on stage.
I'm trying to get the alpha
The black
up front.
box, Marshall. It's a black
The
box.
black box.
Yeah.
It looks like a box.
Great.
It has 8 corners. It's made of metal.
Okay, got it.
It has some chips inside. And you know what it does? It mines Bitcoin.
Great.
You heard it here first. Intel comes out with Bitcoin miner that mines Bitcoin in a box.
Breaking news.
Someone call CoinDesk. Okay, Amanda. You entered the space more recently than Marshall and Mike. Give us, what was your perception of Bitcoin mining when you first entered into it?
Sure. So my background, I came into this world through privacy and then worked with funds, so hedge and venture funds, mostly abroad before COVID. So then COVID happened. I'm like, what the hell do I do? So I think last January, started listening in on Clubhouse to these like OG miners that were talking about, what was going on, the state of the industry, and I was just curious, right? Mining, frankly, has always intimidated me. It's like you're playing like 5 games at once when you're mining. You have to have the site, the operations, the cost of machines, all of these, the power factor, the ESG narrative. Like you're constantly having to play like 4 or 5D chess. And so it took me a while to think, okay, well, maybe I can actually figure this out. So I wasn't planning to ever be a miner. I've done a lot with the state of Wyoming around workforce development. They have a big brain drain issue. So these kids graduate college and they don't have jobs, like future-oriented jobs in the state of Wyoming. So they're going to Denver, Seattle. And to me, I'm like, there's a mismatch here. This is a state that generates an immense amount of energy. There are wind projects, for example, that can't get transmission lines to California to get off the ground. There's a nuclear project that's going up. I think it's a 500 megawatt project. And yeah, nuclear, right? There we go, Wyoming. And so, it's just seeing all these factors and trying to bring some of the miners to the state during the Czechsit, right? So right after, and spent a lot of time in the summer looking for sites and doing this pro bono, and it was just so frustrating. I was like, it's right here. It's right here. And so that's how I got into it. Partnered up with a former landman and an engineer, and we just started figuring it out. And I think, the wisdom from what you all would share now, Amanda Fabiano, Drew, AJ with Galaxy, they were running I think it was weekly 101s or bi-weekly. I would listen to those. You just kind of soak it in. And that's where this is a very big difference between where Marshall started, being a cowboy basically, to where basically I get a catalyst if I just listen, right? So I think the quality of education is amazing. People are doing this on their own time. There's no one paying them to do, to sit on Twitter Spaces and teach. And Sean from Luxor is amazing as well. So really got lucky to be caught up to speed and have a little bit of experience in this industry. But you're taking notes. You're like, okay, S9's okay for a period of time, maybe, right? And you're like, S17's no. And then you got you just start learning bit by bit. And I think it's really doing it is the most important part, because you learn so much on the operations side, and you don't learn without actually getting
Gotta
in
break
there.
stuff.
You have to break stuff. We've broken some things.
No, I think it's a great point. Numbers can look one way on an Excel sheet, but the reality is often very different. You skipped a lot of numbers talking about S9s and S17s there. There's a large cemetery of failed Bitcoin mining equipment. You come from the traditional hedge fund world, though, and I think that's a really valuable perspective, because Bitcoin mining is a capital-intensive business. ASICs are expensive, so is power infrastructure. If Bitcoin mining is going to continue to expand at this rate, there's going to be net new capital inflows that will need to come into the space. What do you think really are the key bottlenecks from some of those traditional asset managers? Really, we're already starting to see it with this rise now of almost 30 publicly traded Bitcoin mining companies, tons of SPACs. You're seeing a lot more interest from institutional investors just from a yield perspective. What do you think really are kind of the key bottlenecks, and what do you think this transition is going to be as mining becomes more and more institutionalized over the next few years?
Yeah, so we kind of took a bet that, maybe the Texans should have a hedge in the Rockies. Texans love to ski anyway, so it's kind of a nice fit, right? For us, I think the more crowded a region gets, the more difficult it's going to be in that region. Doesn't mean impossible, and everything's better in Texas, I get it, right? But it would be probably smart to have a hedge in other places. So that's the bet that we took. We're, our team, we're 4th, 5th generation, Rocky Mountains, all of us grew up there, have families there. And so I think for us, that regional expertise is really helpful, and relationships, frankly, with local communities. But I think that's going to be the bottleneck, is how, each state is different, regulated so differently. And it's been really frustrating, frankly, Wyoming's really fallen behind when it's right in front of you, So that's been
It's not for
tricky.
lack of trying. I've been
It's
on
not-
several calls with
I
you.
know.
You're just dragging them, kicking and screaming.
I know what I'm doing, yeah. So we try, and I think eventually they'll get there, but they have to change how the utilities are regulated, and that's a big that's not going to happen overnight, right? But for example, the Wyoming legislation, it's a state with 550,000 residents, so you can actually get to know your senators and representatives, and they really listen. It's just figuring out how to do it to not hurt retail, normal customers, I think has been a big pushback that we've heard. So.
It's difficult to communicate the fact that Bitcoin mining can be symbiotic to a grid and can add a ton of value, as we're seeing in the great state of Texas. So I'm looking at the time right now. We'd love to get some Q&A. If anyone has questions, there are I believe two different microphones on each side. So raise your hand if you have a question, and one of the folks will come find you. Great. Looks like we have some hands.
We got our first one.
Hey, it's Henry from Finland. Thanks for these educating talks. So just want to quickly ask, how do you see mining and the future regarding demand response management?
Yeah, that's interesting. I can only speak for the ERCOT ISO, but in general, ERCOT's got a lot of products, right, that mining is uniquely suited for. So, you've got CLR, you've got demand response, load response, and mining, when you really understand the inner workings of the machine, you can do all kinds of things that, a battery storage would do, so fast frequency response, primary frequency response. The folks at Lancium are walking around, they're experts in this field. Mining is a unique, large, and granular load that I think we're just scratching the surface of all the things we can do to help, soak grid inefficiencies. A good example that if you guys see the Lancium guys walking around, you should ask, there's a big, Comanche Peak had a big transformer blow up, I think about a year ago, just 1.3 gigawatts off the grid. And you can see real time, and they might even show you the chart within a second, their clients are responding to that event to help stop the inertia of the frequency kind of like propagating throughout the grid. And Bitcoin mining is unique in nature that you can make it overclock, you can underclock, you can turn parts of it off, you can keep the fan spinning, keep it hashing, whatever, that is uniquely suited to help grid inefficiencies. So I think you'll see a lot of things kind of play out in the demand response across other ISOs too. I'm just unfamiliar with some of the others.
One thing I'd actually also add to that is just especially in ISO or RTO markets, we're seeing increased renewables penetration across the world right now. That can introduce a lot of new volatility onto grids. Bitcoin, as a result, you need more demand response or more flexible loads. And Bitcoin mining, as Marshall has just elaborated, is maybe one of the best tools to help basically smooth out that volatility and also subsidize base load generation that will be needed when renewables aren't actually.
See a wind turbine not spinning, that's just like a wasted opportunity. Or it's in the middle of the night, everybody's sleeping, nobody's using power, and the wind's blowing super hard.
Yeah.
Those are things that this helps with.
Yeah, and I think one of the other interesting aspects is that's super unique about Bitcoin mining is the actual, the geographic location, being able to physically go, where there's a giant wind farm that needs to get stood up, but the transmission line development is 18 months away. We can come in, drop some containers, and actually take that load, right there at the site, and then pack it up and move it when that transmission, infrastructure gets built and it can deliver to the power, ACs and all of that. All of those sorts of things.
Hi, I'm Mark from Canada.
Hi, Mark from Canada.
I help global business leaders and political leaders with psychedelics and meditation. So I'm also a proud father of two 18 and 16-year-old daughters, and I'm a feminist, and I want to ask Allison?
Amanda.
Amanda.
Amanda number 2. Fabiana's 1, I'm 2. It's official.
So, it's great to see more diversity, hopefully more in the space. But what advice can you give to young ladies who are, on the cusp of a new era in money and getting involved?
Yeah, I'd say don't sell yourself short, right? I think maybe if I didn't get in my head too much a few years ago, maybe I could have figured this out earlier, right? So I would say that, and then frankly, I'm a big fan of mentorship. So, it doesn't have to be a woman mentor, it could be men and women. Some of the best mentors I've had have been men, frankly, throughout my career. So I think mentors are huge. Everyone in here should get a mentor, right? I think that's kind of a cheat code for life. If you want to learn about something, find an expert in that. We're really lucky to have people, especially in this community, that are so willing to teach, and I've been really fortunate with that, like I mentioned earlier. Whether Drew knows it or not, he mentored me, so.
That's far too kind of you. Untrue, likely.
Hey, this is Jeet from Michigan. I recognize Amanda from the stage. How's it going? So when we read the paper, we see a lot about there's limitations on semiconductors. Ford and some of the auto companies are stopping production because of limitations in semiconductors. You've got some of the chip manufacturers moving to the United States. How has some of this macro stuff impacted the ability of ASIC manufacturers to actually get places in production and kind of changed how you plan going forward? Like you talked earlier about the release cycles impacted your strategy. Could you talk a little bit about how some of this macro stuff is impacting you?
Sure, I'll just talk about high level, and then Mike can talk probably deeper. But the auto industry is one that I get a lot. So the uniqueness with the auto industry is they're just running on very old tech. Airbag sensors are 110 nanometer. They don't make those anymore. It's just the fabs are calling the companies and they're like, hey, we shut that down 10 years ago. And so they have to go through this iterative design process again to kind of get caught up with current process technology. So that's a completely different problem, in my opinion. Beyond that, there's just supply chain issues across the board. There are literally whole industries springing up to do supply chain gap filling. Companies that'll just buy tons of resistors that are unique to some process and be able to sell them at like a 10x premium down the line. So there are issues, but the automotive is, in my opinion, slightly removed.
Yeah, and I think the issues truly are manifesting. I mean, FPGAs, they're big component of the control cards for these systems. And just look at the S19 line there's literally 3, maybe even 4 different control card versions. Some with FPGAs, some with some ARM processors from different manufacturers. So there's no question it's a problem, and it starts to really affect operations when you're doing a 200 megawatt site like Marshall here, and you're managing the sheer number of systems, and you have different control cards. Some have SD slots, some you have to take the top off to get to the SD slot in the first place. I mean, the issues do really trickle all the way down to the site techs actually touching and lifting machines in and out of the racks. Yeah, I mean, the issues are there. There's the semiconductor industry is fascinating. There could be a shortage of some chemical that's only manufactured in Japan because they may have more restrictive COVID policies, and all of a sudden that chemical that's used in the actual manufacturing process now trickles down. And then of course you had COVID in the first place. And the way the semiconductor manufacturing business works, when you have these windows and these allocations that, as they shift between the different products that they're manufacturing, there were times when people were skipping their allocation for a period, and so that literally sets them back 6 months. And that's 6 months that they didn't have those chips because they didn't have people to package them up or to make whatever products. So it's definitely been a confluence of events. Over the last several years that has contributed to some of these issues. Even just getting things on a boat from China over to LA or Long Beach, I think two of the bigger ports, especially for things coming across there. So yeah, it's just been a total cluster.
That's a great question, Jude.
Yeah, adding a subsequent kind of like prong to that question. How does Intel's entrance into the space, how does TSMC building out a factory in Arizona, how do these developments change? Like, are you guys optimistic that this ASIC bottleneck will be whittled away by all these new entrants into the mining ASIC space? Or are you guys short and you think that there will still be friction? Of course, if the bottleneck is eliminated, it's sort of bad for everyone who's a miner because it gets a whole lot easier to mine. I mean, unfortunately, miners want to build their infrastructure and then they want global supply chain disruptions is how they're incentivized. But what are you guys' thoughts? Do you think that this ASIC bottleneck will be whittled away as time goes on?
As the market cap grows, I think it just like the industry in general, like the market cap for public miners is like 100 billion or something crazy now. It's too small of a market for them to ignore to make commodity grade hardware and have all the other great things like customer support, reliable supply chains, all these other things we've kind of struggled with over the years. That's what I'm most excited for.
Reliable supply chains. What a future that would be.
Yeah, I mean, I think from a limiting or minimizing the shortage, I mean, I think that will happen over time. But if you're talking about standing up a 5 nanometer US fab, it's a $5-10 billion project. That's a 2-3 year project timeline. So it's not going to be a short-term solution. Obviously, strategically, geopolitically, all the other reasons, it's fantastic for doing it. But the reality is we're going to be on the mining side specifically, we're going to be subject to this for the foreseeable future until some of the again some COVID restrictions and some of that will loosen up and some of that will flow out. But then there's still other issues there's so many things that go into the supply chain. It's such an intricate mesh. It's going to be a challenge for a while.
Amanda, long or short U.S. hardware manufacturing?
Ooh,
That's a good one.
I want to be long. In my heart, I want to be long. I hope we do it here. So the way I see it, I spent a lot of time abroad, and I think the digital yuan is fascinating, right? You have the Belt and Road Initiative and the digital yuan, the main, one of the best VC investments in the history of investment was from a telecom company in South Africa, investing in Tencent, which is WeChat, which is now connected to their payments infrastructure and all around the world. And so, the way I see Bitcoin mining and proof of work really is a counter to China's Belt and Road Initiative and the digital yuan. I think it brings about, Western values and equality and freedom everywhere. And so mining is an amazing first customer for energy producers. And I think if we could unlock like the energy potential, not just get the stranded energy, but let's think like, what if this could be a solution in Africa or South Africa or South America, you know, over the long term? I think that's really like the mission of Bitcoin. So the more that chips and the hardware can be developed in, you know, stable countries, frankly, so like US would be amazing. I know Austin, there's a lot going on in Austin, so Texas for another W. So,
We out here.
Texas 2, everywhere else 0.
That's right.
But that's basically, you know, what I think big picture is we need to just get more essential manufacturing in the US, and we need to get Bitcoin mining in some of these regions to prop up these infrastructure energy projects around the world.
Yeah, totally agree. I think we have time for,
Yeah, there's tons of
I
questions.
think we have time for about 2 more questions. Yeah.
Hi there, Adrian here from Johannesburg in South Africa. I've read that it's been a concern that quantum computers could one day undermine Bitcoin and other crypto mining networks. But how realistic is that threat?
That's a great question, and I'll give you a less technical reason, and then Mike will probably give you a technical one, and Amanda will probably give you like a very logical one. So in my opinion, you're gonna have much bigger fish to fry if quantum supremacy is ubiquitous. Things like airplanes falling out of the sky, your power grid's not working. Like if somebody was able to engineer a quantum computer to attack Bitcoin, there are far bigger, more lucrative things to attack first, which are a much bigger deal. In my opinion, if I have to dodge planes falling out of the sky, I care about Bitcoin a lot less. So, and that's not like a far-fetched thing, like GPS disruption, you know, TCAS systems on planes, like global financial meltdown, period, internet not working. Like there's a lot bigger problems that would happen in the age of like a nefarious quantum supremacy actor.
I'm just gonna let him drop the mic on that one.
I want to hear Drew.
So I actually think John Newberry, the Bitcoin core dev or former Bitcoin core dev, I think I've heard him talk about this idea where Bitcoin is actually, like if someone invented a quantum computer and developed one, how would you really know? With Bitcoin and really with Satoshi's coins, you have like a massive economic incentive to develop a quantum computer, but it's also an alarm bell because as soon as someone moves Satoshi's coins, then potentially that's a wake-up call. Hey, someone has found a way to break SHA-256, perhaps using a quantum computer. I don't think it's actually a super realistic concern with Bitcoin because you could always, like, I think if it really happens, you could hard fork to a quantum-resistant algorithm, and I think, you know, potentially that's a way you can solve that problem. But I think Marshall's totally right. Everyone's bank accounts are like meaningless in a world with a quantum computer. Yeah. What would you say?
Yeah, I would say make friends with your local ranchers after this. Become self-sovereign.
Wyoming has some good ranchers, that's for damn sure.
Texas has better ones. So.
All right, I think we have time for one more question. Yeah, go right ahead, sir.
Hi, thank you. I'm Matt from Tampa, Florida. Nice everybody to come to our state. My question is back on the power and the mining. Do y'all see people or power companies going to mining to use that excess energy that they create that just goes into the earth?
That's a great question. In Texas, there's a lot of peaking power plants. And when I learned the business model, it just hurt my brain. You have companies that build huge infrastructure that are on for 10 or 20 days a year, and then have these heat rate contracts that are like commodity forwards for later. That's how they pay their bills and get financed. And there's a lot of oil companies here walking around, Exxon, Shell, a few others, that are now exploring those kinds of things to have like an on-prem base load to do like internal demand response and bouncing off their base load. The problem is those like HERCOs and heat rate contracts around those kinds of assets are like 10, 20 years long. So it's a very big deal to break those, to be able to then just insert a base load like on premises. So I think people are starting to think about it and wake up to it. There have been power companies in like Cambodia and other South Asian countries that have done that. But as far as like stateside, it's a lot more nuanced, and I think like power grids and markets might be more complicated and nuanced not than mining. It's really crazy, and I've just started learning about it. So there's a lot of inefficiencies, but there's a lot of paperwork in the way. Lawyers, yes.
Mike, Amanda, anything to add?
Yeah, I mean, I think there's no question that over the next several years, absent specific, contractual and sort of logistical from the finance and legal perspective, I mean, I don't think there's any question that the energy producers will absolutely, generators, whether or not that's oil and gas or nuclear or hydroelectric. I mean, how much electricity is wasted as water just flows through dams with the actual generators turned off because there's not enough demand. So there's no question that at those times is also when power is the least expensive. So depending on, of course, your power market, ERCOT, New York ISO, California, wherever, depending on how the sort of the market is set up, at those times they're not making any money. It's effectively free power, and so I think as a way for these energy producers to monetize assets that would otherwise, are sort of sitting there accruing, whatever debt instrument they've got it financed with, it provides us an amazing opportunity to increase the IRR of the entire project, which then helps them to go build the next, abundant energy source to make the world better.
Yeah. I would just say, from my perspective, vertical integration is the dream, right? You want the power to the mining, and then you can arbitrage the market on the energy side as well. So you kind of, it pads some of your risk unless they're both not going well. Then you're then you might as well just
lever all the way up.
Yeah, lever as much as you can. But that's my thought. I think vertical integration is the kind of the dream for us, at least.
Totally. Well, thank you guys so much. It's been helpful. I think they're kicking us off right now. But yeah, thank you guys.
Thank you guys.
Thanks.
Check it. Yo. Check it. Check it. Yo. Check it.
Hi friends, this is Jordan Chen from Whatsminer. With great thanks to Bitcoin 2022 and our renowned partners, I would like to share with you the staying power journey of Whatsminer. From day one, Whatsminer, born in 2016, we focused on keeping our clients and ourselves staying power. Our first generation product, M3, was launched in 2017. At that point of time, it was the best product based on 28 nanometer chips. Our second generation product, M20 series, helped our customers entering into 4X era. 20S was the best product in the world with highest hash rate. We are very proud to say those customers who purchased large quantity of our M20 series have become giant in the industries. Then come to our third generation product, M30 series, with industry pioneering 1-year warranty. This means we are very confident in our product quality with long life cycle. Our M50 series will go hand in hand with you into 2X mining eras. Whatsminer teams are eager to enable our customers always stay in power in Bitcoin mining. Stay in power is not a word, it's a commitment. Let's review our last 2 generation products. You will come to know how good they are staying powering. With 750,000 units installed, our M20 series was named the new king of mining rig for the year. We obtained good market share, become substantial challengers, and gained the #1 share of the new hash rate added for the year. The earliest supplied M20 series already worked for our clients for more than 3 years' time. The accumulated repairing rate is only at 2.59%. See, they are really staying powering. As we all know, our M30 series was a game changer, enhanced our clients' journey of staying power. It can run more stable and much longer. We have already shipped over 600,000 units up to today, and it's still increasing every day. The accumulated repairing rate is further down to the 1.66%. We also pioneered the industry with 1-year warranty period. We are pretty confident M30 series can robustly work for our clients more than 4 years or even much longer. They will stay powering you. Now, I would like to present to you our latest product that is born for mining. Stay in power never ends. M50 series adopt single silo design. They are compatible with former generations, easier to repair and replace. The overall system efficiency is further improved. M50 works at 29 joule per terahash with 114 terahash. M50S work at 26 joule per terahash with 126 terahash. In terms of air cooling miner, they are the highest hash rate rigs available in the market. They are really powerful and are ready for shipment right now. Thanks to our great R&D colleagues, we make great staying power products. Our M50 series was designed based on Samsung 5 nanometer process. We adopted more intelligent frequency search technology for higher overall efficiency. We implemented intelligent strategy for real-time monitoring of machine status and corresponding adjustment for more stable operation. We kept improving the tools, APIs, for more user-friendly and easy custom-made. We continuously update encryption technology for higher security. The efficiency of our power supply has increased to 96%. We conduct all-round tests in different environments to ensure strong robustness. All these efforts make M50 series launch here today. To support global ESG initiative, we are now launching our first generation water cooling solutions. Our solution including water cooling mining machine with embedded power supplies, 2U server cabinet, inlet and outlet manifold, and also CDUs. It operates with ultra-low sound, with 95% heat recovery rate. Therefore, our solutions can provide our customers carbon neutralities.
This is our M53 water cooling mining machine. It can accommodate inlet water up to 50 degrees Celsius and outlet water up to 60 degrees Celsius. It operates on super silence, no dust, and lower failure rate, comparing to air cooling machines. It also provides our customers up to 30% overclocking space. The power consumption of the water cooling mining machine can be increased from 7 kilowatt to about 10 kilowatt.
We initially provide 3 kinds of specs, and more are in the pipeline. We can reuse the heat generated by the water cooling machine to provide heat to greenhouses, to homes, to fishery farms, to hospitals, etc. Bitcoin mining from now is no longer energy consuming business. Let us work together to find out more scenarios to recycle the heat generated by the machines. We are ready. With more and more customers coming from overseas in the last couple of years, we have tried many ways to improve our services to them. We built overseas factory, repairing centers, and training centers. Our production capacity in Southeast Asia factory has reached 15,000 rigs per month, and will reach 30,000 by the end of this year. Less leading time from overseas production will let our customers get our rig as early as needed. Other than this, we also put huge efforts in building overseas after-sales service network. Our team provides online instant technical support via social media like Telegram, Twitter, Facebook, etc. We also provide one-on-one online repairing training. We have established 6 authorized repairing sites around the world, and 5 more are under training and accreditations. The training is totally free, as we just want to make sure our customers stay in power. We have built a strong partnership along the supply chain, especially with one of the world's leading technical giants, Samsung. Our core team remains stable since the inception of our companies. And most importantly, our strong R&D team make us strong and stay in power. We have submitted 293 patent applications, 100 of which have been granted. To have better interactions, we are under massive improvements on our company website. We also renovated our company logo to be more internationally friendly. Whatsminer brand stay in power. We are targeting in mining business in long run. We have already seen some of our partners converted our air cooling machine into immersive machines to achieve better performance and lower cost. Yes, our liquid cooling solutions is under development and will come out soon. Please stay tuned. Finally, I want to say thanks to our partners. It's your continued support making Whatsminer stay in power. Our customers are from around the world. Whatsminer team will continuously polish our products, improve our services for a better future of our customers and the industries as a whole. We will keep ourselves steam power. Steam power never ends. Thanks again for your continued support. Let's keep working together, stay empowered together in 2022 and in the future. Thank you.
Hi, everyone. My name is Yuri Bolovic. I'm head of mining at Foundry. And I'm happy today to participate in this announcement of the new unit of M50S. But before we dive into that, I do want to tell a funny story of the first time I met Sunny and Wright from MicroBT. And that was back in 2019, at the end of 2019, when I was working at Fidelity Investments, and went together with my colleague Amanda Fabiano, who's now at Galaxy, we went to a mining conference in Chengdu, China. And we assumed that MicroBT, of course, is going to be there because it's a mining conference. So by that time, we had a little bit of business relationship with them. We bought some units from them, but we never actually met in person. So we reached out and asked them, hey, you want to grab a lunch around the conference? And they said, of course. Now, at that time, we had no idea that they actually did not plan on being at that conference. And turns out, when we met for lunch, both Sunny and Wright took a 3+ hour flight to meet us and have a lunch with us. And of course, we felt really bad about that, but it was a very productive lunch, and it was really telling of their character and their customer service and the way they do business. Around the same time, end of 2019, is when Mike Collier was launching Foundry. And Foundry is a fully owned subsidiary of Digital Currency Group. And it's really DCG's entry into the infrastructure space after being successful in asset management with Grayscale and trading with Genesis, and of course in venture capital investments, having invested in more than 200 companies in this space. Foundry has to date invested more than $500 million into the North American Bitcoin mining ecosystem. And part of it is buying large amounts of units, M30Ss from MicroBT, which we then use to offer financing to North American miners to help expand and build that ecosystem. We use some of them for self-mining and also to sell some through now Foundry X. So without further ado, I do want to share some of the preliminary test results of the new M50S unit. So Foundry received one Whatsminer M50S unit on March 3rd, so about a month ago. And we conducted preliminary tests in our R&D facility in New York by doing a 10-day test and taking measurements of the unit 3 times a day. And what we have found is that hash rate and power join efficiency were consistent over the time of our test. They were all within the expected product specification range, and hash rate was actually consistently higher than the product specs. We have also experienced 0 errors and event codes during testing. And as you can see, the efficiency was consistently higher than 26 joules per terahash. And this is also a snapshot of that same unit running for actually over a month on Foundry USA pool. And you can again see consistent hash rate. And I do have to point out the 2 dips in hash rate that you see, that's actually our testing team testing the low power mode. So hash rate has been consistent even longer than the 10-day test. And finally, I want to share some also results with hash rate and miner temperature, which were consistent despite fluctuations in facility temperature. So what you can see here, that hash rate was again stable. The machine temperature was stable in the high 60s Fahrenheit degrees, even though there were fluctuations during the day and during the test at our facility. And so with that, I do want to thank MicroBT for this opportunity to test their unit. I want to thank them on the launch of new M50S unit, and we look forward to doing more business with them in the future. Thank you. Thank you. That was.
Thank you for making it today. I'm glad our panel is at 1 p.m. because if it was earlier, many of you would be asleep or still having the after effects of last night. So thank you for being here. My name is Nishant, and I'll be the host for this panel today. I represent Bloxbridge. We are a consulting firm. We focus on public relations strategy for cryptocurrency mining companies. I've been advising cryptocurrency mining companies since more than 8 years now. And we bring subject matter expertise and historical context to advise our clients. Can we start with introductions of the panelists, beginning with Chris?
Okay. Hi, everyone. My name's Chris Manzano. I'm with Bitmain, and we are a distributor. We are a manufacturer of the leading miners on the market. And I've had the opportunity to travel around and visit mines across the world and just live a great adventure.
Hi, I'm Christy, aka Ogata Girl. Do technical advisory for Valkyrie Investments as well as technical advisory from Merkle Standard. I have had my hands in the mining industry for a while and just kind of float around the space and help people.
Thanks, Christy.
Hi, everybody. This is Johnny Yao. I'm representing Canaan. Canaan is an ASIC chip designer in the industry. Now we have customers in North America, Asia, let's see, across the global customers, and very glad to be here. Have a short discuss with everybody.
Oh, Canaan is also the first ASIC to market.
Yeah.
Oh, nice. Hey, I'm Mike Francis with Distributed Ledger, the CEO, and we provide infrastructure services to the industry, mostly to institutional and enterprise clients.
Thanks. So our topic is state of the ASIC market. We'll try to stick to the topic because there are many panels today about mining and other issues relating to mining that will be covered in those panels. I would love to know, because of the experience that each panelist brings here, about the state of the current ASIC, starting with what are the current ASICs available, when are the shipping available, when is the earliest shipping available, what is the dollar per terahash that is current. Starting with Chris, would love to know about Bitmain's current offerings.
Okay, so our newest model, we have two directions that we go with our miners. We have the S19 XPs, which are going to be shipping in Q3 and Q4 of this year. And those are our most efficient air-cooled miners. So it's 21.5 terahash, watts per terahash. And we also have our hydro miners. So with our hydro miners, we have a hydro container, and that can hold 210 hydro miners. And we have different series of miners coming. So the one that's coming the soonest is going to be our S19 Pro Plus hydro. And then we also have the S19 XP hydro coming next year. So these are the latest ones on the market, and if you have any questions about getting them, we can always connect later, and I can help you get more information.
Christy, could you inform us about various other ASIC makers' offerings right now, because there are so many these days?
There are many.
Maybe only 2 or 3 of them.
Yeah.
Leaving Canaan and Bitmain because we have
I think an honorable mention is definitely, Whatsminer with all of their rigs, but probably not the person to talk about that. Canaan, the Canaan guy.
So what's Canaan's latest offerings and about MicroBT2?
Currently, because tomorrow we are gonna do launch latest model, but it's also 12 series. At least this year, we are mainly focused on manufacturing on series A11 and A12. Because of this multi-foundry strategy, this year we should have no problem on supply, but more or less we are focused on the long-term customers. So if you have any needs, visit our website or shoot me an email. I believe currently we can satisfy most of the long-term player in the industry.
Thanks. Especially the point that you mentioned about satisfying most of the players. There are a lot of announcements being made by miners these days about buying big orders from equipment manufacturers who are fairly new to the space. And then many of these orders are also going south. They are being delayed. they can't be fulfilled on time for some other reason. I would love to know, Christy, what are your thoughts on it, especially seeing that you know the historical context, because you've been in the space for a long time. You've probably seen the similar stuff happening in 2016 when there were pre-orders that were never delivered, etc.
Yeah, I mean, what changed between kind of 2020 and now is COVID, right? The COVID supply shock is still in effect. I think most of the fabs have kind of caught up. I think a lot of the component manufacturers have caught up, but we're still feeling the effects of the supply shock, right? And that's why there were a lot of delays. It wasn't a fault of individual equipment manufacturers. No one in this space, not just Bitcoin, but hardware in general, was prepared for COVID. Like, we never expected all of the operations to be down for 6 to 8 months. And even now, there's still cases of COVID outbreak at local plants or at manufacturing companies, and you need to quarantine, right? 14 days, and that's still in effect. Now we've got better processes in place. We've got folks that have been vaccinated. It's being handled a lot better. The supply chain is starting to catch up, and things are kind of calm right now, which is good. So I think definitely this year and next year, fingers crossed that we don't get another major variant, but we shouldn't see any more disruptions in the supply chain. Should be quite stable. But I mean, 2016 and 2017 and 2018 were completely different. It was due to overwhelming demand and the manufacturers and the supply chain not understanding where this demand was coming from and not having prepared in advance for it. And also, as you know, you get plenty of people that come in and say, yeah, I'm going to drop $500 million on silicon today, and they actually don't have the capital. So it took a lot of people time to verify, you know, is this demand real and where is it coming from? Now the industry has just really caught up. People are educated. People understand mining way better. So I think we're not going to get into that situation again.
Got it. Talking about new players, now we also have some new manufacturers that are only making or selling the chips, not the whole miner. Chris, I would love to know your thoughts on all that goes on into making this chip into a miner at scale in a data center, because your company deals with doing that.
Yeah, so my brother's Chris, I'm Mike. That's where I come from, is a data center world. Providing enterprise services, and we spun this company out of our telecom company. And the very first thing I saw was, man, this is the Wild West here. It was pretty interesting, you know, all the things that were happening, but nothing was really fit for a data center at all. And then you see all these people spending hundreds of millions of dollars on machines and then sticking them in a warehouse full of dirty energy, dirty air, and no security. You know, so the bar is set very, very low, and we have plenty of room and opportunity to improve. And things have improved significantly even since we've started the company.
What do you think are the signs that tell you about whether a manufacturer is legit or not? If the audiences were to, you know, take some points to look at when they hear about some manufacturer making a next 26 joules per terahash miner or even lower than that, what should be the things they should look out for to know whether it's a legit player?
You know, to me, it's the evolution of any industry, and this is going to continue to evolve. And the chips themselves might become more commoditized. And what we're really looking for are companies that do business with, that care about their clients and want to help really progress the whole market. And it's not just about the almighty dollar or the Bitcoin.
What do you think, Christy? You've been in the industry for a very long time. What do you think are the red flags when?
Biggest red flag, honestly, is people that are very skittish about kind of letting you do your technical due diligence. So contrast with, if you're going to, as a customer, go in and purchase hardware from one of the major suppliers, right? Whether it's Bitmain or even skipping out of Bitcoin, if I want to go and purchase a bunch of GPUs, I'm going to go and talk to probably the product manager and probably their engineering team, right? I have a ton of questions. Biggest red flag in this industry right now is people that are hiding everything under NDAs and contracts, and they're not willing to share details. A competent team should be able to completely open their books. They should let you, ask questions, walk you through their floor plans, their clock trees, how they're handling things. If they're not doing that, that's the first red flag. The second is if they can't answer really basic questions about the supply chain. Like, who are your suppliers? Who's doing your actual chases? Who's doing your thermals? Are you doing that in-house? If they can't even have an intelligent conversation with you about how they're going to cool this chip, that's also a big red flag. Third is lack of understanding of this industry. It's not just building a SHA-256D ASIC, it's what do miners actually want? How are they using these devices? What are some of the pain points right now in the industry, and how are these people addressing them? And then the fourth is if it's a legit clone of either Bitmain, Canaan, or Whatsminer's performance, major red flag. And anything below that performance, you just need to be incredibly skeptical of. But white flags, good things, is if the team is legit, if they answer all your questions, if they're pretty transparent and open with what they're doing. Honestly, if people in the hardware industry understand that there are not too many secrets, you can easily reverse engineer and tear down a chip and figure out everything, right? It's better to get that first mover advantage, be very honest and upfront with what you're doing, how you're competing, and just run at it. Big white flag, and I'm actually happy to say that there are some people coming into this industry that have exhibited those white flags. So Intel is one, and then there's a few other stealth companies that are out there lurking, very much trying to do right in this space, which is good to see.
That's good to know. These red flags are, I think, same, and they keep coming up whenever there's a bull market like now. So Johnny, Canaan was the first manufacturer to take an ASIC to market. Canaan has been there for a long time. Where do you think is the industry headed from here? How is the technology in ASICs evolving? We've been at 7 nanometer for a long time now. When do you think we will see the next biggest miner or the most popular miner with a 5 nanometer chip or lower process node? Or maybe we don't even see that. Maybe there's some other side that the evolution is going. What do you think is the next stage in development of ASIC technology?
Yeah, I said that we have been in this industry for a while, right? So here I would like to talk a little bit more about engineering process instead of this 5 nanometer will goes to the market. Because as a major component, the chipset inside the miner, the biggest challenge is coming from engineering for now. You don't know how the products will move out of lab to the manufacturer process. And also in the coming 2 years, we still see the supply constraints on the fabs. So basically, doing all those high performance architecture, doing this high performance versus this power consumption will take a bit longer time when it goes down for this chips processor. So what we are doing now, basically we are gonna to announce a product only when all those testing is done inside you. We will announce to the customer when we think this is going to the market. For now, inside we see for this minus 5 nanometer process, we have done meaningful process on performance and also this efficiency part. But let's see when the market is ready to take this, and I cannot foresee if it is this year or next year, because my assumption is the same situation with Bitmain and other manufacturers. We are all doing on the engineering side and waiting for the market to see the right time to let it go.
what do you think from Bitmain, Chris? When do you think the market will be ready for the next nanometer node or the next generation of ASIC miners?
So I'm going to echo what was spoken here by our partner. We don't think that the focus should be on the nanometer of the chip size, because as we know in the market, okay, let's be honest, everybody here has been doing something with the miners that they get. It's not like everybody just runs the miner stock. So we know that everyone's been experimenting, everyone's been using different solutions. So you can get a lot of power and a lot of efficiency from a miner depending on the system that you build around it. So I think the next step, what we're seeing with MicroBT and what we're seeing with our own miners, with our hydro systems, companies are coming out with complete systems. So it's not necessarily the efficiency of the individual miner, but how all the parts work together. So adapting the miners and the systems to particular environments and adapting things to the way that you run your miners. In Texas in particular, you're looking at demand response. So turning your miners off when it's better to send that power to the grid or when that's needed. So there are a lot of changes that are happening to the way that miners operate and the environments that they operate. And I think that going forward, we're going to see companies focusing more on offering a simpler solution to everyone in the market, because before that you had to go and experiment. I have to check this and try this and do all that to get the most out of the machines that you're using. But in the future, I think companies are going to help you do that, and they have a lot more data, and they have the engineering background to do a really great job of that. So you're going to see every company's particular flavor of what they believe the best system should be. So it'd be cool for everyone to learn as much as they can about what's out there on the market and find the one that works best for you in your own environment.
Oh, that's a very good point. Something that it also brings up is you're talking about evolution where these machines are becoming more comprehensive. They are including a lot of end solutions for the data center. But on the other hand, you have players like Intel coming in, which are just selling the chips, where everything else has to be taken care of by the data center itself. Francis, I would like to know what you think, because you operate and run and even build these data centers for your clients. So what do you think is the best way forward? Is it one of them? Is it a hybrid approach or something else?
I think it's a hybrid approach. Necessity breeds innovation, and we are, like we were talking about the supply chain shock, right? So now you have that we realize that a lot of our chips are very centralized in where they're processed and built, and that is becoming quickly decentralized, and there's a lot of players investing in building chips, right? Now the chip's just a piece of it, so it has to be put together, and you're probably going to have a lot of new manufacturers springing up that are building systems with whoever's chips, whether it's Bitmain's or Micro or whatever, anybody's. And the very first thing that we used for mining, actually, we were mining Monero and ended up with Haven using a processor made by Intel called Xeon Phi, and it was and we had a lot of fun with those, and we still have a ton of them running. But the reason we went with that at the beginning, and I personally wasn't a fan of ASICs to start with, because I thought that it's a chip that only does one thing, right? And the way I think about that has changed significantly now. But then it was like, I want a server I can stick into a rack. So, we started looking around, and we ended up finding a guy that actually worked for Intel. He's now on a shareholder in our company named Ingo Wald, and this guy wrote some crazy code for these processors. But the problem with it is no one else knows how to write the code that Ingo wrote for these things. So I guess what we're going to see is like I said, a hybrid approach. Not everybody's putting their stuff in a data center. Not everybody can afford to, run miners. We have a group internally that is working on something for residential, people that want to, they want to do some mining in their home and not heat their house with it. So anyway, we're going to see a ton of innovation in the next few years, and we probably have no idea what that's really going to look like.
These are exciting times.
Yeah.
So you touched upon home mining, and we've been hearing a lot of news about isolated cases of home miners and some isolated experiments about bringing mining to homes where the heat can be used to heat pools or farm marijuana, etc. I wonder what your thoughts are on home mining. Do you think we will see ASICs that make it profitable again for home miners? That's also something that Zach Dorsey talked about, he wants to bring home mining back. What do you think, Francis?
I think there's a lot of interest in that. There's quite a few barriers, and we all know that. Power consumption, heat, and generated, and all that stuff. But we're going to overcome those things, and they will be overcome. I think the interesting part of it is finding other things that we can do with that amount of computing power, and someone's going to do something with that eventually. Not just solving, a problem in hashing, but actually using that computing power, and there's a lot of it, to do something else too.
What do you think, Johnny? Does Canon have plans to bring home mining back?
Actually, I see a lot of interesting trying from our customer. They are more relying on this immersion cooling solution, try to use that to the home mining. But I have not seen the big usage of that. Some of the customers in North Europe, they are doing very interesting stuff for this reduce those heats, but specifically not in the home. But I see maybe in the near future there was some small solution can bring that back to home.
What do you think, Christy? Will we see a reemergence of home mining?
I mean, we already have it. It's there. It's quite active, and if you know where to look on Twitter, or if you even talk to customers of Compass Mining, etc., you'll find the home miners. What's interesting now is part of the strategy around Intel selling raw chips and other players selling raw chips is because it opens up third-party manufacturers to come in and build unique solutions like, let's have a space heater that mines Bitcoin. Let's have a toaster that mines Bitcoin. Remember the Bitfury light bulb that mined Bitcoin? Yeah. I think what we're going to see in the next 5 to 10 years is a very slow trend of people caring a lot about how do we decentralize Bitcoin at a global scale? How do we ensure the hash rate is in every home instead of just clustered into a few public companies, which can easily, an executive order in America could easily hurt a lot of that.
We've seen that happen in another country already.
We have, and yes, we like to say that that won't happen in America, and America's nice and stable and yada yada, but things happen. New leaders get elected, things happen. And for Bitcoin's future, we want to make sure as much of that hash rate is in the hands of individuals as possible. We can't lose that decentralization narrative of what makes Bitcoin so important, so valuable as a financial system. And so in order to do that, you need to start thinking about, okay, how do we start moving hash rate into everything, not just into an actual ASIC, but into other, components in your house. So at least in Washington State, I've been quite impressed by seeing the amount of miners that are using old ASICs, S7s and S9s to heat their homes. So they actually do some really cool retrofitting of their furnace to push hot air through. I think we're all familiar with the infamous Bitcoin hot tub, the Shah Spa, which is awesome. But I also see quite a lot of folks in Washington doing that as well with their hot tubs.
She's talking about Washington State, not
yes.
the people in Washington.
Yes. So we're starting to see a lot of that experimentation and innovation, and just having access to raw chips will encourage and promote that. And that's where we want to go in the future. We need enterprise miners, they're very important, but we also need a large percentage of the hash rate to be in the hands of individuals. Because then, absolutely, a country cannot kill off Bitcoin. It is impossible to kill it when it's in the hands of 10 million people versus just a few companies.
Agreed, 100%. I wish everyone saw that. So, Chris, does Bitmain have any plans on bringing home mining products or making investments in that area? Or you may have some stories to share for your customers.
I have my perspective on this. I think every company at some point or another has had their take on home mining or has had the idea about it. I don't know what future plans there are with this, but if we get into it, home mining, a lot of it is about the philosophy of Bitcoin. I mean, if you're really a believer in Bitcoin, you want decentralization, you want everyone in the world to be able to learn about this great technology. So when I look at home mining or ways to make home mining feasible or ways to do it in a great way, I look at it in two directions right now. You can do home mining, but I look at it more from a learning perspective. So if you just want to have like a Raspberry Pi or something that lets you, or even just mining Bitcoin on your PC, just to learn about it, I think that's pretty cool as an idea, just being involved with the process. And also another way is you can still own miners and do a kind of long distance home mining, because there are a lot of companies out there that are getting retail clients involved with the mining process by offering them hosted space, and that's their miner. They can go see it. So is that home mining? I mean, you're still a retail miner. Maybe it's not exactly, but maybe there are middle grounds, and there are other ways and solutions that people can do. Maybe a community can come together and have a small little co-op, and then every person has their miner then, and then you have more people involved. Because I think that right now, with the way the industry is going, we need as many people involved with it as possible to basically make it a better place for all of us.
I remember Bitmain had this Ant router, which was a Wi-Fi repeater that also mined Litecoin and Bitcoin, and Bitmain used to give them out for free like swag at these conferences. It'll be great to have free swag from manufacturers again at conferences that mines Bitcoin, even if it's small scale.
I have heard this suggestion. I'm gonna take this. I'll seriously consider this. So.
Bring back USB miners, man. We want USB miners.
I'm gonna make a note. So.
Now we've been talking about decentralizing Bitcoin by having machines that anyone can use anywhere, even at home. What about decentralizing the tech itself, like what even Jack Dorsey recently talked about, which has been talked about since the time Satoshi used to be involved, which is open source ASICs for Bitcoin mining. Where do you think the industry is headed, especially your thoughts on it, Christy, because you also pioneered a new proof of work for Ethereum, and you have a lot of expertise in that area.
You can't open source, I shouldn't say you cannot, but it is quite impossible to open source the TSMC libraries, like your actual design files for the chip. But you can open source everything else around the ASIC itself. So you can open source the firmware, as we're seeing with the Brains team. You can open source the thermals, the chassis designs, the PSU designs and schematics, every other component, but it is the actual chip that is going to be difficult to open source. And I think we need progressive decentralization of the tech. I think where everyone fails is where they try to make it binary, right? Like it's open source or bust. It has to be a gentle progression. So let's start with, selling individual chips that will get you access to schematics, design files, manuals, so you can write your own firmware. That is a step in the right direction. We start with, open sourcing PSU designs. Let's standardize on a universal power backplane for data centers that we can all use, schematics, et cetera. The patent for that.
Data center designs that
open set. Yeah, exactly. NVIDIA and AMD both have these HPC kind of designs that are standardized that they deploy around all other data centers. Why don't we have something like that for Bitcoin? We come together as a mining, as a group of miners and say, okay, here's our universal design to enable other people to rapidly deploy. And we're going in that direction with containers. And I think 2 to 3 more years we'll get standardization there. I don't think there is, I don't think there's a lot of benefit to open sourcing the chip design. You need to create opportunities where everyone in this space can build a business. And if you take away kind of the innovation and the optimization around chip design and around ASICs, that would kill the business model for a lot of major players who, reinvest their capital back into this industry. So I don't think there's a lot of benefit there. It's not like the moment that you have a SHA-256D competitive design, you can just walk into TSMC and get allocation, right? That's never going to happen. So there's more to it than that. That's my take.
That's a very good insight. So now you got me wondering, if the process node is very high, say 40 nanometer, for which there are foundries everywhere in the world, could you have an open source design so people can just create their own?
Tinker, right?
Yeah.
So I think actually that'd be a good initiative for Bitmain, Canaan, and Whatsminer to come together and do a open sourced 16 nanometer or 22 nanometer design, and then do that in collaboration with universities, with your computer engineering universities here in America, to teach, the next generation of hardware developers about Bitcoin and about the technology. So we don't have to keep reinvesting and learning. Like this, there's so much redundancy right now in the hardware space, it's really frustrating. Whereas coming at it from the software industry, where we're open source by default, we learn from all the mistakes and what everyone else has done. We don't have a lot of that redundancy. So I do think that's a great idea. Like, let's do a 22 nanometer, something that's not going to be competitive, just for learning and to let people bootstrap and, start tinkering.
Are you making notes for recruitment marketing?
I think I agree with this, because it is really kind of waste of time every time you are starting from scratch. And it's not healthy for the whole ecosystem. Nowadays in the industry, it is hard to find some talent, just because compared with software, this hardware design is really, really expensive for everybody. So open source for some old generation ones is a great idea, at least from my side.
Francis, what do you think is the potential for open source designs for mining data centers?
Well, I think it's huge. I think, as kind of like 5G, 5G has gone almost all open source. Pre that, everything was proprietary hardware, proprietary boxes, very expensive, no real sharing of information. And I think we very likely will, by default, end up going that path in the mining industry. And with equipment that's far more modular too, that maybe it's a PCIe card that you slap into a server, then I can run whatever server I want and put my chips in a server, or standardization. You were talking about standardization. I mean, across the board, there's so many areas where we could use some standards. And
especially data center design.
Yeah, definitely. You can pack a whole bunch of miners into the space of one rack, right? But the amount of power that rack uses is way more than anybody's expecting to use in a data center.
Or the heat generated.
Yeah, we almost burned down the first data center we tried to mine in.
Well, I think a lot of people in the audience have that experience.
Probably, yeah.
All right, so I think we have time for one more question that I have for the panelists here, which is, it seems like it's a must, which is something related to environment. And so I'm wondering what your thoughts are on changing the proof of work.
No.
Well, I mean, what your thoughts are on the cost of changing the proof of work?
I think anyone who is suggesting to change Bitcoin's proof of work simply does not understand how elegant Bitcoin's design is. For any cryptocurrency, you need taps and sinks. You need a creation point of wealth for coin issuance and a way to get coins in the hands of markets, and then you need a sink, something that locks up or takes wealth out of the ecosystem, that keeps the resource scarce. This is in economics, by the way. This is like video game design 101 as well. And Bitcoin has the most elegant sink I've ever seen, because it's not just infrastructure like ASICs, it's the data centers as well. And that keeps the value of Bitcoin, afloat. And so while I love the innovation of, proof of work changes like PWX, which is now a BIP, like I appreciate that as an engineer, it's not right for Bitcoin. If we change the proof of work now, you would damage all of the miners that have deployed and invested tons of resources into Bitcoin, right? You would force all of the mining pools to readjust their stack. You'd kill off a bunch of equipment manufacturers. Like, that's not being a good partner to the ecosystem. People have outlaid and deployed capital into mining because they believe in this ecosystem. Changing the proof of work algorithm would be really reckless. Now, do I think that, you know, once we're all dead in 70 years, we probably should adjust SHA-256D to maybe be a little bit quantum resistant? Yeah, but that won't be my problem then. I'll be dead. So, but yeah, I think it's really reckless, and it's interesting because, again, as an engineer, you appreciate that kind of stuff, and it's great to explore it, but we need to come back to why SHA-256D is so critical. And then on the energy consumption, it doesn't matter what proof of work algorithm you switch to, it's relative, right? If we switch to something that is 50% more energy efficient, miners are just going to go buy 50% more hardware and consume.
You see that every time there's a new ASIC,
yeah,
which is 4 times more efficient than the previous version.
Exactly, and that just gives you more room to deploy more hardware. So we're not really saving anything, we're just getting more and more dense. And then someone who's very big on the ESG narrative will find a way to complain about how we're wasting or destroying the environment there.
Yeah, I've heard about criticism about even the waste that is produced from mining hardware. That's a separate criticism that will probably increase after we've taken care of the environmental criticism. All right, with that, I would like to thank everyone who came here. Christy made a very good point about when we are talking about changing proof of work to proof of stake for Bitcoin to save the environment, we need to think also about the Bitcoin community and not just the community who has nothing to do with Bitcoin. Thanks, everyone. Thanks for your time. Thank you.
Bitdeer is the world's leading crypto mining platform with 3 business domains: Cloud Hash Rate, Miner Plus, and Data Center. We are excited to provide mining services to individuals, facilities, and institutions around the world. A simple, secure, and efficient mining solution is just 1 click away. Sign up now.
great, let's get started. I've been really excited for this panel. We really have some of the world's experts up here on the financialization of mining, capital markets, impact on miners, a lot of very cool topics that we're going to dive into today. So first off for intros, I'm Brian Wright, VP of Mining at Galaxy Digital. I touch a little bit of our self-mining side, our miner finance side. I'll turn it next to Ethan.
Thanks, Brian. My name is Ethan Vera. I'm one of the co-founders of Luxor Mining Pool, and we do a wide range of software and services in the mining space. So been around the mining industry for 4.5 years now, and incredibly excited to see how far it's come. And the financialization of mining is one of the most exciting pieces in the space today.
Zachary Sepharadi, CEO and founder of Dalma Capital. We're an asset manager and investment bank. Multi-billion assets under management and advisory. Personally bought Bitcoin in 2011 and launched our first crypto fund in 2016. Continued to manage and advise on assets in the space.
Hey guys, my name is Leo. I'm the founder of Initial Research. You've probably come across my writing a few times. So I published a lot of mining-related pieces, and especially on the financialization of mining. So this is something I've been thinking about for a very long time. We're also building Alchemy Protocol, a protocol where miners can issue contracts.
And I'm Yuri Bulovic, head of mining at Foundry. On the mining side, we run the largest Bitcoin mining pool. We have equipment financing business, buying and selling units, and advisory business.
All right, thank you all. So I think to start off, I'd love to get a quick answer from each of you on just what's sort of the state of capital markets right now for Bitcoin miners, the state of the financialization of mining, and how has it sort of evolved, particularly over the last few years? And maybe we can even just go around and start with you, Ethan.
Sure. So I kind of see us on V3 of capital markets and mining. V1 was 2017 to 2019 era where for the first time ever, miners could access capital markets through public equity. And that really helped bootstrap a lot of the early companies in the mining space. Then starting in 2020, following into the next years, we started seeing debt markets really be unlocked, especially with innovations like ASIC-backed financing, which a few of the guys on the stage here do. And then heading into V3, which I think is really exciting, which will probably be the starting in 2022, but really taking off in 2023, is the financialization of hash rate-based instruments. So hash rate-based forwards, futures, and looking forward to picking Leo's brain on this panel later today to talk through it.
Zach.
So state of capital markets, I mean, we've got circa 30 publicly listed miners now. Majority coming to the market, or a large plurality coming to the market via SPAC mergers, some with RTOs, some coming into junior markets and then uplisting. I think that the industry is still misunderstood by the capital markets. It's interesting, if you speak to some of the first miners that actually listed, they thought of themselves kind of as funds, right? They potentially wanted to do a Bitcoin ETF and realized that that was a step too far for regulators, so they decided to list a mining entity instead. And we actually look at miners in a lot of ways not as traditional businesses in the sense that most are listed. They don't have customers. They don't have a lot of employees. A lot of their funding is CapEx, not necessarily OpEx. And we actually do think that that initial ethos of these entities being really capital allocators, they are really closed-ended funds in a lot of ways that are listed in the public markets, and we think they should be kind of viewed and priced and analyzed as closed-ended funds as trading at either premiums or in some cases discounts to NAV. We think that the markets do seem to be price discovering themselves towards a model that actually reflects that, and looking forward to discussing our kind of views on that more, although maybe they're a little non-traditional from what many are thinking. We do see the opportunities for more miners to approach listings in the more traditional way. We also are starting to see cross listings. Obviously there have been a lot of uplistings onto the NASDAQ, that still is where all liquidity is. You get the much better pricing, much better liquidity. There's part of me that's a little bit nervous about too many miners being kind of under the scope of the SEC, what that means for the network. But that certainly is where liquidity is, and certainly, capital-intensive industry, capital efficiency is becoming as important or more important than the efficiency of your miners these days. So that's certainly where things are progressing, and would agree with the other points that were made.
Yeah, that's great. And I think we'll dive a little bit more into public markets shortly. But first, let's go Leo and then Yuri. Quick comments on sort of the state of things today.
Yeah, so I think to zoom out a little bit, there are two vectors that we can use to generally measure the development of the capital markets for mining. One is the size of deployments of all various types of instruments, and the other is, like as Zach touched on, the capital efficiency of these tools. Right, so on the size vector, we've seen it has experienced massive growth since 2019. So just from my personal experience, when I was running a mining operation in 2019, it was impossible to get financing from these gray-haired guys, right? It's just very difficult to get even like a 2 million loan. Whereas today you see 40 million private loans get issued left and right. And on the second vector, which is the capital efficiency of these instruments, in 2019 you have to show up with a piece of your claim to your data center or use your land as collateral now. And even in 2019, the major players were still a little hesitant to issue loans backed by ASICs because the illiquidity of the machines. But now ASIC financing has become a pretty big part of the game, and loans have come down from like 20% of interest to 11, 12% we see more recently. I think the next step is, okay, in addition to loans, can we do convertibles? Can we do directly instruments that's directly priced based on the performance of the hash power itself?
And I would just add, looking back to 2017, and you're mentioning it was hard to get financing or a loan. It was hard to open or keep a bank account for not just Bitcoin miners, for any cryptocurrency-related business. So we definitely have come a very long way. I think also over time on the financing side, when Foundry launched financing in late 2019 and Galaxy, like at the time, I think we were among the first to do that, and now I think you have more than a dozen financiers in this space. You also have a couple of traditional financiers coming to space. They're obviously still testing the water, still learning about the ecosystem. So I see the positive trajectory, but comparing to 5 years ago, we definitely have come a long way. And I would just say, I do think that Bitcoin mining ecosystem and capital markets, I think, are and always will be slightly underdeveloped compared to the rest of the Bitcoin markets and ecosystem. And it just, people don't pay as much as attention, but I think those two ecosystems do need to kind of grow hand in hand. And if Bitcoin price grows a lot, that means that there's going to be a lot more also investment in the Bitcoin mining ecosystem, and a lot more players come in to offer products and services.
Great. Yeah, thank you all for that. I think that was a really good overview of sort of where we are today. I think, Zach, you brought up a lot of really interesting points on valuing miners, sort of like closed-end funds. We've seen the explosion of miners going public over the last year. Like you said, like 30 some odd. I think we'll probably see more go public in the near and medium term. What is the state of things? Why has that sort of been a strategy? And any other sort of interesting insights that you might have related to public markets and miners? Yeah, well,
interestingly, it does seem public markets are starting to cool off. A couple of the planned SPAC deals seem to have gone on ice. We think that probably as a result of some price correction, valuations not necessarily looking as attractive as they were. However, it really is a matter of perspective. We still see a lot of miners. If you look at things through the kind of closed-ended funds lens, miners trading at nice premiums to net asset value, which demonstrates that there is, it makes sense to continue to raise equity in the public markets, particularly again when you're on the markets that have that good pricing and liquidity. Which, as I said, it's NASDAQ all the way. I mean, unfortunately, that is the reality. As much as we'd like to see other markets cool off a little bit. Another trap that we see some fall into, and I'd love to be proven wrong on this, is doing RTOs. Unfortunately, if you want to raise capital in the markets, you want to be, and you look at this kind of closed-end funds lens, you want to be trading at a premium to NAV. You want to convince the market that by giving you additional capital that they're getting a good deal, and that's just not the case when you do these RTOs and you start off with crappy valuation. Why is anybody going to pay a premium for your shares? And then you need to use that equity that you raised to go out and buy assets. So if you're trading at a discount to NAV, it just doesn't ever make sense to raise capital. So that's we would advise any miner looking to go to the markets, hold out to be able to go for now the SPAC route, or hopefully in the future more traditional route to get to market. We think actually also direct listing can make sense. We haven't seen that really uptaken as much, but it could make sense with pipes are at the market offerings coming later on. If you're, but you obviously have to have a good business and prove yourself. One thing that does worry me about the capital markets and the future of the capital markets is I think that a lot of miners have overpromised. I think that some that are in the public markets are going to end up disappointing. And I'm worried that casts a cloud on the whole sector. I hope, again, that doesn't happen or that doesn't materialize. But we think that there is a material risk that that there are delays in machines that are already priced in getting delivered, or very likely getting switched on. The impact that has on pricing and whether that kind of clouds the entire sector. As we've seen, there does tend to be some correlation amongst miners. So hopefully, because obviously there are very good players out there that are able to deliver and will be able to deliver, we hope that they aren't punished as a result of those that have overpromised. But those are kind of a couple tidbits here and there on insights of the capital markets, if it were. One thing we'd also love to see, when we talk about the capital markets, we're kind of talking about equity capital markets. We'd love to see debt capital markets come alive. It's when that happens, obviously debt products are interesting and attractive for miners. We think that there is decent probability that some good miners could get good credit ratings, and we think that there's a possibility to get an offering underwritten by the right miner, but when that happens is a question. But that's something where I see potentially an interesting prospect in the future. These are capital and asset intensive businesses, so it should make sense in theory. In practice, you have a much more conservative investor base in DCM, so not sure when that will materialize.
I would love to jump into this topic of NAV because I find it incredibly interesting. So we track ASIC prices on our data website, and it's really interesting to match that up against the valuation of these miners, and I'm just like ideas racing through my mind as you're saying this. But if you look at the public mining landscape right now, the majority of miners are valued at somewhere between $300 to $700 per terahash of existing hash rate. So there is quite a bit of disconnect there between what you can purchase an ASIC for, let's call it $80 a terahash, to what you can get valued at in the public markets. So I think that's one of the reasons we've seen such a large appetite for there. But would love to hear all of y'all's opinion on what do you think is a better trading multiple in terms of that NAV, or if you think that is a good metric to look at for miners.
Yeah, and just sorry for those in the room that when we talk about NAV, we're talking about looking at the value of the assets based on their current market value rather than book value. So when you're looking at how many physical miners a miner might have on the balance sheet, instead of reflecting the book value, which would be depreciated, and obviously they have very aggressive depreciation cycles based on the accounting principles that are being applied, you'd actually value those based on what could you actually sell those for today. Then you also have to figure out how you're going to value infrastructure. Now, infrastructure is not as marketable. It's not as liquid to sell, so that's a little bit more difficult. But we kind of base that more on replacement costs. We estimate around $400,000 per megawatt. Obviously, there's a big range there. We've seen secondaries trade up to $2 million a megawatt. We've seen guys that can develop at $180,000 a megawatt. But when we kind of look at this NAV-based calculation, yeah, we are looking at pricing the miners on the balance sheet, pricing the amount of Bitcoin that sits on the balance sheet, pricing the infrastructure that sits on the balance sheet based on its kind of sellable price in the market today, rather than the book value, and then figuring out the value of the business. Now, we don't just look at the miners that are sitting on the balance sheet, but actually we look at orders of miners that are sitting, that are in some way on the balance sheet. They're obviously being priced in. You have obviously some very large public miners where a large portion of their value is based on machines that are on order, that are not delivered yet, and their profitability when they will be switched on. You kind of have to apply a discount rate to those that haven't been delivered yet. But that's kind of the methodology that we're looking at when we look at this kind of price to NAV basis.
So when I think about the question, why are so many miners going public, I do think partially it's because they can and because they expect a big multiple on the hash that they have online, or that's not even online, because the market is pricing it like that. And I just wanted to give the folks in the room the sense of capital intensity of this industry, right? And in public markets, you get better access to capital. So we've done some analysis of all the publicly announced orders of new ASICs and mapping that, based on at the time what the price per terahash might have been. And we calculated that miners globally will need around $3 billion just in 2022 to complete their orders. And then if you also look at the capacity that's been announced of about 5 gigawatts that miners are going to build, again, if you use some assumptions, that's another $1.5 billion needed to build that. So it's a lot of capital that miners need. They're thirsty for capital, and either through debt or equity is one way of raising capital more efficiently.
Yeah, thanks for that, Yuri. And I actually think that's a really good way to pivot even into a next topic, a little bit away from just public equities, but to ASIC-backed lending. It was something that several of you talked about, just giving a high-level overview of the state of things today. Yuri, you mentioned Foundry along with Galaxy were sort of first movers in the space among a few others, and it can be a really effective tool for miners because the industry is so capital intensive. Yuri, maybe I can go right back to you. What is ASIC-backed lending? What's the state of things? How does Foundry sort of approach this?
Yeah, so that's a product where miners can raise capital backed by ASICs that are either already deployed on hashing or a future order of miners that has been placed. And I think today it's about a dozen financiers or lenders in the space. I think with Galaxy, NIDIC, Foundry being among the biggest. And like I said, there's probably a couple of smaller ones, traditional financiers that have entered the space. When obviously that as a product is very attractive to miners because they can use mining machine as collateral and then use the income from those machines, the mine Bitcoin, to repay back the loan. From the kind of position of a lender, there's a couple of things you have to look here. So when we analyze the deals, one, we do focus, and it's a little bit of cliche, but we really look at the team, right? Do they have experience? Have they built facilities before? Have they mined before? Are they trustworthy? How long have they been in the industry? And it's really, and I'm sure many of you here can relate, but how many times have I seen a pitch deck where I call it Trio Fantastico. You get 3 guys, energy expert, financing expert, and data center expert, never plugged in a machine in their life, looking to raise hundreds of millions of dollars to build hundreds of megawatts. That's very risky, right? No matter how experienced they are in their careers, mining is still a relatively new industry that's not easy to navigate. So that's kind of evaluating the team and their ability to execute. And then obviously the second and most important thing is really evaluating what will be the cash flow of these units and will they be able to repay the loan, and it really comes down to your expectations of how quickly the difficulty or the network hash rate will grow over the next 12 to 24 months. And finally, it's really looking to ways how can you as a lender mitigate the risk associated with a deal. So obviously, all the units are put as a collateral, but you have to look at, in case the price of that collateral drops, does the miner have some other units hashing that you can add as a collateral? And then you have to start looking at what is your default strategy, right? In case miner, for whatever reason, defaults on the loan, what can you do? And so at Foundry, one of the, or the most successful deals that we've done are the ones that are for miners in a trusted hosting facilities that Foundry already has been doing business. And in a case of default, we have a tri-party agreement with a hosting facility as well, where we would take over the contract, we would mine with those units until the loan is fully repaid. And obviously that de-risks the deal a lot as compared to maybe units being in a country or at a site that we have no access to. It's really messy then to repossess the units. And then, mind you, even if you repossess the units, if they're not hashing, they're not really valuable to you. And obviously you can always sell them on the market, but you have to keep in mind, more likely than not, the miner has defaulted on the loan because probably the mining economics have changed. So even if you find a buyer, you probably won't get the price that you wanted to maybe make yourself whole.
Yeah, thanks for that. Ethan, do you have a few comments?
Yeah. We had a really fun weekend project a couple weeks ago, which I guess is what miners do on the weekends. Nothing better to do. But basically what we did was we looked back to January 2018 and looked at the S19, S17, and 19 as cohorts, and basically looked at January 2018 up until now, and basically mapped out what a ASIC financing deal would have looked like at the time using existing economics, so we could see how that would perform. And the analysis we drew is that under a standard loan of 65% LTV and 7-cent power, half of the financing deals for an S9 and S17 would have been under collateralized during the lifetime of their loan. That's mostly due to really decreasing mining economics during that period. Whereas with the S19s, there was very few months that actually happened. And the S19s are also the same period in which ASIC financing became prevalent in the market. And so the mining industry really hasn't experienced a market where ASIC financing is prevalent, and we're seeing very decreasing mining economics, in which case miners are getting liquidated or need to top up the collateral in their contracts. So I think that will be very interesting to see the next time that happens, now that miners have taken on this leverage. And I think the key takeaways here are, for the financiers, lowering the LTV to reduce rates. From a quantitative perspective, I think Yuri touched on the qualitatives really well, but lowering LTV, and then make sure that you're financing very low-cost miners, which will ensure they're profitable. And then the analysis that we drew from the miner's perspective is make sure you're taking on a reasonable amount of leverage. I think some miners are getting a bit ahead of their skis on that. So somewhere between a 0.5 to 0.7 debt to equity ratio, I think is adequate in this market. And I wouldn't go too much above that just from a risk profile.
Leo or Zach, do you have any comments on ASIC-backed lending? Anything that Yuri or Ethan said that you want to go off of before we switch topics?
Yeah, I mean, this is a very complicated product because, so as Yuri pointed out, there's a lot of operational risk inherent to this modeling process, right? And also the revenue is incredibly difficult to model. So there is the difficulty risk, the spot risk, the fee risk. I mean, fee is a little bit less. And projecting into the future, 12 to 20 months, this return can vary in a very, very large range. And so there are no established scientific process for modeling this type of risk. I mean, there are certain frameworks that we can use, but all these frameworks are, they have frictions, right? They have frictions to reality so at the end of the day, it really depends on who has a higher risk tolerance and how much a buffer you're baking into this process. So this touches on something I said earlier, okay, the capital efficiency of these instruments. So I think we are definitely evolving towards the right direction. There's definitely more granularity into these modeling process, but even even if we have a scientific process, which basically means that we have a closed form solution to modeling these time series, there will be inherent operational risk that sort of characterizes the black swan events.
And I just want to add, the also operational risk is not only on the borrower that they're going to build a facility on time and plug units, but if you're talking about the new order coming in, you could have delays in the order being shipped, which happens often, or the batch maybe is not as good, so you see a high failure rate. All those different things would potentially make the borrower default.
I think the points have been well covered. I mean, the one thing we would say is we advise borrowers on ASIC-backed loans. One thing I've seen, I think to the detriment of borrowers is, I mean, one thing I can lead a horse to water. I can't make it drink. When you hire an advisor, try to take their advice a little bit. But I think it's also important to hire advisors, run a competitive process, make sure that you're presenting things the right way, make sure that you're, entering into structures that are well advised. There is, this kind of, I think we're all, have this libertarian part of us that brought us into the space, and there's also this, no intermediary ethos or disintermediation ethos that there is inherent in crypto, and I think that pulls a lot of miners that should have advisors away from working with advisors, making sure that advisor is also, asking your advisor to get paid by the buy side creates or by the lender side creates a complete conflict of interest. You don't want them talking you into a bad deal. So, the one thing we would add is, we think that obviously we're going to eat our own cooking, but we think it is important to work with advisors who can help structure these deals, help get lenders to, compete to give you capital, but also make the job easier for the lender to be able to do a deal with you that's executable, that's, potentially in a market or with a structure that has been bespoke to your needs rather than, an off-the-shelf solution.
Leo?
Yeah, just more on this delay part. It's actually super fascinating, right? So miner economics is classic commodity production business, right? You have recurring costs, and you get varied amount of these digital crops, and whose value is fluctuating. But this delay of new shipment of machines is a highly concentrated risk. It's almost like your relative distance to Bitmain, and this distance is an abstract sense, right? Your relationship with Bitmain, how prioritized you are on their client list, and also, your distance to their shipping center. Right? How long does it take for you to actually receive these machines? So this is a pretty unique type of risk that's not really. It's not really. You're looking at traditional commodity production business. You don't really see this kind of risk, and this is just a unique situation of like everyone is buying machines from Bitmain. So it'll be very interesting to see how Intel entering into the business, other players entering into the business if that changes.
Thanks for that. So we just talked a little bit about risk. You were just talking about it, Leo, sort of in the sense of ASIC-backed lending, but it also comes into play on how miners can manage risk. And then even beyond that, what are the financial products that are available for miners today? What's been missing to date? What needs to be put in place to help miners? And Leo, I know you've thought a lot about this topic. Do you want to start? And then maybe I can hand it off to Ethan after that.
Yeah, I think a mining operation is super interesting because it sits in the intersection of traditional capital markets, right? You have access, as a mining company, you have access to the public equity market, the debt market, private loans, but at the same time, you're mining something that's entirely digital. And in some sense, like Bitcoin is the anchor of a decentralized financial system, right? So there is still a wide universe of decentralized financial instruments, whether it's Bitcoin perps or other kind of, just digital instruments that's backed by this resources that miner haven't really explored yet. So one thing that exists for traditional commodity producers futures, options. It's a lot of times these energy guys come into Bitcoin space, and the first question they ask is, okay, how do I hedge this? How do I protect my margin? I really just want to lock in like 30% or even 20% of on top of my costs. So this type of instrument hasn't really existed yet. I mean, it's kind of a obvious idea, but it hasn't really existed yet because, one, the modeling complexity of these type of instruments. So let's say a miner is selling 10 terahash over the next 30 days. So who's going to take the buy side, right? How do you model this? So if you have the equivalent amount of information as the miner, why don't you just mine it yourself? So and these are the reasons that this type of instruments, although it's pretty obvious, it hasn't really taken off yet.
Ethan, do you have any comments here?
Yeah, Leo and I probably both sound like broken records. We've been talking about hash rate instruments for a few years, but I promise everyone they will happen, and Alchemia is a good example of innovation in the space. My view on hash rate-based instruments is that they're incredibly needed by the market. The ability to lock in a future value of your hash rate or sell that hash rate forward as a form of fundraising. And I think they will develop in various forms, both decentralized and centralized. This is a very nascent market. Hash rate instruments have never been built before, and nor has compute power instruments. And so it is going to take a few years to develop. It's going to take multiple companies, a lot of different parties engaging with it. But I think the end result's going to be very valuable for miners and investors too. In some ways, trading hash rate actually has a lot more physical ties than trading an asset like Bitcoin. It has ties to things like renewable energy development across America, or Moore's Law and the rapid technology advancement of chip production, or geopolitical relationships between China and Taiwan. And so there's all these very real physical world topics that come up that will determine the value of hash rate. And so I think it's going to be a very interesting asset class for investors and traders to engage with, which is very necessary to build this market to face miners who are trying to offload that risk. So I think in the second half of 2022 here with Alchemia and some other products, and moving forward, there's going to be a lot of innovation here that will allow miners the ability to hedge their future cash flow.
There are hash rate linked loans that are available in the form of offtake deals. They're not very popular. There are a couple lenders that will lend to you in Bitcoin, but the problem is, you're then short hash. And that's not a position a lot of miners want to take. They could have gotten lucky a couple times in the last cycle by taking those loans, but you're short hash and you're short the price of Bitcoin, and most miners see both of those going up for obvious reasons. But yeah, there certainly is a lot of room for development in that space. I think actually these offtake deals make sense as part of a portfolio of loans. I wouldn't bet the farm on an offtake deal, but it has been a useful financing instrument, for example, for other commodity extraction industries. Certainly, the gold mining industry has relied on these offtake deals as a way of financing development. So, we think that, again, for large-scale borrowers, as part of a portfolio of different loans, that they do make sense if they're well structured, and you can put certain protections in place, kind of optionality at both ends of extremes, because in reality, most lenders don't want to put you into a default situation. Another space that we see is important in developing, but it requires more of the equipment manufacturers to play ball, and actually it was alluded to earlier by one of the early customers of Intel is getting financing effectively in some way, or better financing terms from the manufacturer, and that's what has existed in other industries, particularly industries where your manufacturer is providing you an income-generating, capital intensive piece of equipment for you to pay that off with some of the proceeds of the capital generation. And in most cases, those are supported by either EXIM financing or credit insurance. We think that's and that's how we can kind of get into single-digit loan pricing. We can get LTVs or a different perspective on LTVs from lenders. And we see that as being a way of, I mean, we have a similar view. The number that we arrived at was, and I don't remember when we struck the number, but before 2025, that miners need about $10 billion to invest. So, just to kind of keep things going, and that's not a very aggressive extrapolation where we are. So we think that will become an important part of the mix. It won't be available to a wide portfolio of borrowers, but most importantly, it requires the manufacturer to be on board, because in essence, they're kind of the central counterparty of the financing. Now, the frustration that we've had as the manufacturers, they see that it would be a great instrument, but they thus far have thought, well, we don't need to do that, right? Our customers are happy to pay us months in advance in cash. And if that customer isn't, then there's another 10 behind them that are. But the reality is that there are other manufacturers coming to the market. Some of those manufacturers have incredibly cheap capital themselves, and will be in a much better position to provide that financing to their customers. So as capital efficiency's importance is rising and will continue to rise in perspective of miner efficiency and electricity efficiency, we see that as becoming an important tool. Is the traditional trade finance that really has existed since the advent of banking. Actually, banking was created for trade finance. So if you don't know where the term bank came from, it referred to banca, which is bench, which was where the bankers sat in mercantile Italy and provided loans to people that went on trade finance missions, or that went on trading missions, sent a ship to go buy spices. So that's a lot of where banking came from, and where we see hopefully the industry going in the not too distant future.
Thank you all. Those were great answers. So we have about 5 minutes left, and I'd like to end sort of similarly like how we started, go around and not talk about the state of capital markets and financialization, but where are we going next? If we think about maybe the next couple of years, what's on the horizon? And would love a quick answer from each of you. Maybe we can start with Yuri this time and come back this way and end with Ethan.
Yeah. So I think we're going to see a lot more players coming into the space just on basic pure asset-backed financing. I do agree that hash rate, spot exchanges, future exchanges, all those products, that's cutting edge. I'm glad people are working on it, building it. I think it's going to be some time until that actually becomes predominantly used by miners. But I'm also very excited just about simple basic financial products and services that miners are still not taking advantage of. So whether you're simply holding onto your Bitcoin and not selling as a miner, whether you can earn yield on that Bitcoin, or if you're selling your Bitcoin, are you getting the right price? Or you could sell future and capture some spread. So there's a lot of simple financial products and services that miners to date haven't been really taking advantage of, and I think over the next 12 to 18 months, I think many will start to do that.
Leo?
Yeah, so I'm very excited about Bitcoin native DeFi, and I think this is in several years this is going to be much more important than equity and debt universe that we're playing around here. But like I said, I think Bitcoin mining company is in this unique position of intersection of both worlds, right? On one hand, it has the access to equity and debt market. The other hand, it has all these toys that they can play. So I think kids this generation, kids growing up right now, they're not gonna, they think differently, they dress differently. They're not gonna come to this game and start thinking, oh, how do I play with equity or debt? They're going to play with all these toys that are fully digital native. So I think of all the things that are that we see today, yeah, Bitcoin mining company is the only thing that really have the share characteristics. So I'm very excited to see all the toolkits that Bitcoin miners have access to over the next few years.
So there are many things that I could touch upon. We touched upon a few. I think Yuri also made a good point on kind of treasury management and those kind of solutions that are fairly simple, but that more miners should be taking advantage of, and will help them institutionalize and be kind of less speculative, and ultimately grow and be more efficient businesses. One that we didn't get a chance to touch upon that I hope to see more of and expect to see more of is M&A. I think that one of the challenges with M&A historically was this kind of valuation differential in the mindset of the buyer and the seller. The seller kind of wanted to look at their best kind of comp set and say, hey, I'm worth however much based on this EV to EBITDA or this forward EV to EBITDA or this EV to pay to hash ratio, using Marathon as a comp or one of the kind of more expensive looking mining businesses. But then the acquirer, you look at the acquirer's perspective, they don't look at it like that at all. They're not going to look at public comps. They're going to look at what are your assets worth, right? You have this many machines, okay, that's worth this much to me, or I can buy it in the market for this price. You have this much infrastructure, okay, how much does it cost me to build that infrastructure? You'll get a premium for the kind of opportunity cost of your infrastructure being online today versus developing it. But I think this was has historically been the problem with the kind of valuation gap between buyers and sellers, where also looking at other industries where M&A makes sense, there's no kind of efficiency gains, integration, it's not, so what's valuable about M&A is getting bigger, right? Being bigger, and ultimately the bigger players will have cheaper sources of capital, and the large players, that are highly valued will have effectively the cheapest capital versus the smaller players. Now we see, hopefully, now that miners are being priced more closely to NAV, that will start to unlock M&A, where there's not such a huge gap between the mindset of where the acquisition is accretive to the buyer, but also makes the seller happy that they've made a good return for their investors. So hopefully we see more M&A happening in the future, and on integrated businesses rather than just infrastructure, where but it does require, at the end of the day, you need two parties that can do a deal, right, and can agree a price, and that's been a challenge historically.
Ethan, do you want to close this out?
Yeah, I think we just ran out of time, so I'll be quick. Of course, we're excited about hash rate-based instruments. It's something that Luxor hopes to build and help facilitate in the future. So I think that's one area that quite a lot of excitement on. The second area I want to touch on is the geography in which can access financial markets. While we're all here based in the US and Luxor is a US-based company, we think it's incredibly important that other regions of the world gain access to these products. If we continue down the path we are now, where only American and Canadian-based companies are getting access to all these products, we're going to be in a situation where there's too much hash rate in North America, and we think that the South American nations, European, Asian, and elsewhere really could benefit from this capital. And so going to be trying to spend more time with capital allocators, educating them on the space, and hopefully finding the right risk-return profile for them to access these markets.
Well, thank you all. You all shared a lot of awesome thoughts. We've matured a ton, but there's still a lot left to build, and I'm excited for what's next.
Awesome, thank you.
Thank you.
Awesome.
sitting on my mic. It's a little bright.
Good afternoon. How's everybody doing? I'm Jason Brett, and this panel is about public policy and Bitcoin mining. I'm going to let each of my wonderful panelists here introduce themselves, and then we're going to get right into it.
Hello, I'm Tristine Pafer. I work at Riot Blockchain, and I'm the founder of SatCenter, a 501c6 Bitcoin trade association.
Good afternoon. I'm Lee Bratcher. I'm the president and founder of the Texas Blockchain Council. We're an industry association, and we focus majority on proof of work and Bitcoin mining in Texas, making it the leader in the country and the world.
Good afternoon. I am Julie Stitzel, head of Bitcoin policy for Cash App.
All right. One of the opening questions I'd like to give everybody is, a lot of people saw in the news how we had Europe talking about possibly banning Bitcoin mining. So I think that's a good place to start regarding public policy. And I want to turn to our experts to explain a little bit of that dynamic and how that might be a little different from what we heard that China did last year. Everyone's always talking about China, but I think we want to talk about Europe first, then we're going to lead a little bit into the US policy issues here and let you know what you can do to help with public policy and Bitcoin mining.
Tristan, go ahead.
I'll kick us off here. So I think what we are seeing happen, or had happened in Europe and is still going to continue to happen, is just a lack of education about understanding how energy works. Period. That's really what's happening. You've seen these rolling blackouts. You've seen Europe trying to push and force itself into clearly 100% sustainable energy renewables when it's not ready. Their grids are not ready. They're too stressed. The demand is reached. And so because of that, they're scared of industries like Bitcoin mining, which obviously consumes a good amount of energy. So it becomes the bad actor in the room. It automatically becomes the bad guy. And so I think that was the easy target that had kind of played out in Europe, but then they realized that that would not solve their problems. And they also realized what a force Bitcoin and Bitcoin mining is to reckon with, and what their constituents were saying in response. A lot of different parliaments and governments across Europe have received a lot of pushback over the time period. So we're seeing kind of that play out, which is now bleeding into US policy as well. Anything?
Well, I think it's echoing what you said. The key takeaway from what we saw at the EU is the desperate need for education. And you see that carrying through at the state level with bills that we've seen in New York. And you see policymakers at the federal level as well that are really trying to better understand the dynamic or the relationship between proof of work operations and energy. So lots of education, opportunity, I would say.
So let's play a quick game. Let's just imagine I'm from the sun, and the sun uses a lot of energy to heat the earth. Lee, what is this constant narrative we hear about with the use of energy? And why are there these certain people on earth that are in charge that worry about it so much?
There's a couple conversations we had there. The first is we need to talk about the value of Bitcoin to the world, to humanity, to human flourishing, and energy consumption relative to what that value brings. And once you've had that conversation, then you can talk about energy and energy FUD directly. It's important to understand that it's really easy in a meme to talk about Bitcoin mining uses as much energy as the country of fill in the blank, Paraguay, the Netherlands. I've seen all sorts of, you guys have seen it too. And what we really want to focus on is what kind of energy are we using? Are we using stranded energy that would otherwise be wasted? Are we conducting grid stabilization? Are we creating incentives for more base load generation in jurisdictions where there's just not a lot of economic incentive for that generation to be built? So if you think about Bitcoin mining, if it was all happening in one place where that energy would otherwise be used by the citizenry of whatever country it was, and it was all on one coal plant, that's kind of what the detractors would want you to think. But in reality, it's extremely distributed. It's benefiting grids all over North America and the world. It's creating incentives for renewables to eliminate flare gas in places like North Dakota, Texas, Nigeria, all over the world. So if you look at it holistically, after you've talked about that high level the value of Bitcoin for society, and then think about energy usage, stranded energy. It's a much more nuanced conversation, and I think that's an educational piece that takes longer than a Twitter thread. I mean, we certainly want to be pushing these narratives on social media, but we need to be sitting down in these representatives' offices and in these policymakers' offices and having prolonged conversations about what's happening in your district. How is this affecting your constituents?
I think Lee gets to a good point, though, where when you walk into that office, you immediately have to determine, okay, are they an ally or an opponent? And if they're an opponent, then you have to overcome that barrier and make the case for Bitcoin, and then you can get to the energy conversation. If they're an ally, then you can, I think, go into the nuanced conversation. But you have two tracks there, and the way that you're presenting the energy conversation, it needs to be tailored and depending on the specific policymaker. I don't know if you've experienced that too, because I know you've been doing some meetings on the Hills as well.
Yeah, I'd say, the one thing that the Bitcoin community does really well is sharing the grid stability and the opportunities in Texas. But we don't do a good job of sharing what those opportunities look like in other states, other jurisdictions, other regions. So typically when you go into an office, you as a Bitcoiner live in said district, you have to talk about it from that district, what that means. For example, in Arizona, they deal with a huge surplus of energy, and they are literally paying people to take energy. And so they have these ridiculous contracts with Southern California where they're trying to get rid of the energy and they can't. And obviously Arizona's hot, so you would have to be a little creative here, really focus on maybe immersion cooling or some other opportunities for mining. But there's so many areas of opportunity that affect every representative in this country. And so to talk to them about energy, you have to talk to them about what it means to their district. Do they have hydro? Do they have oil? Do they have, these other opportunities that you can tap into and really speak to them about? And it's a difficult conversation because, like we said about energy, most of the time that I'm speaking to senators or representatives, I am 100% going through Energy 101 basics. Like, the lack of understanding about energy is extremely high. And it's not really necessarily their fault. As a representative, you have to know everything going on. You were briefed 100 times a day about 100 different topics. So constantly having Bitcoiners in their office talking to them about Bitcoin, talking to them about Bitcoin mining, what this means, the opportunities, the jobs, the advancement, is something that has to happen consistently because other industries are also vying and fighting for the same time.
One thing also, and I hope people keep in mind, these are the experts that are literally on the front lines deciding what the future of policy should be in the United States for Bitcoin mining. So they're doing really yeoman's work here. We also see, not just in Congress, but the White House recently did an executive order on digital assets, and it looked like some of the questions had to do with, does proof of work use a lot of energy? Do we need to move to other consensus protocols? Don't these people understand we're talking about real good money here? Like, what's the problem? So, like, what can you as experts say to folks who maybe want to, fill out something to send to the White House or contribute or help make their voice heard on this debate? Because as we were talking a little bit about before the panel, they're facts, and we feel like we have the facts on our side, but it's about getting that across and communicating that.
Well, I think also, in addition to the executive order out of the administration, you have an open rulemaking right now from the Office of Science, Technology, and Policy that's evaluating the relationship between energy and digital assets. And all of those opportunities, or all of those are opportunities for the public, yourselves, to weigh in and to tell your story about how this is, the personal story even of how this is affecting you, or if you're working with a firm, how many jobs are created as a result of your work? What does it mean to your economy? And how are you actually trending towards leveraging more renewable energy so that the opponent's narrative doesn't weigh or outweigh, I guess, what we are trying to say in those conversations. But those opportunities, I think, are going to be more and more frequent as well with the EO. And so for folks who aren't familiar, that came out last month. And it's a pretty accelerated timeline. So you have a series of studies that not just study energy, but also illicit finance, consumer protection, market volatility, financial inclusion, so it runs the gamut, but it's a fairly ambitious agenda for the government. But so I think there's an opportunity across the board for Bitcoiners to weigh in that respect.
Yeah, and I'd say there's two things that Congress does really well, which is react and overreact. And so these are kind of two areas exactly what's happening, what stem from this EO, what's stemming from the conversation. This is obviously a panel about Bitcoin mining public policy, which is an extremely hot topic because we touch a variety of categories and industries that most do not. When you're advocating for public policy, when I'm on the Hill speaking to people, I'm speaking to a variety of committees, which is a little unique. I'm talking to people on energy, I'm talking to people on finance, I'm talking to people on technology. It's a very unique topic and issue set. And so because of that, everybody wants a piece of the pie. Everybody wants to talk about Bitcoin. Everybody wants to talk about Bitcoin mining. And so there's this huge opportunity, like she said, to respond to the RFI from OSTP and a couple other options. But the reason why is because we're talking about it. Their constituents are talking about it. It's in the news. It is constantly in their feeds, right? And it's an election year. So there's an opportunity that we have to be in their ear. Representatives who are running for re-election this year need money. That means they're going to listen to you. That means they're going to take your calls. They're going to do meetings with you. They want you at their fundraisers. They want you to be a part of this conversation, obviously, because in the end, they will win. But in the process, we have to play the political game and win ourselves.
Yeah, and Lee, I'll give this one to you first, since it's about states, and of course, everything's bigger in Texas. But then I want to talk about other states like New York, and Julie's working there, and the other states that Tristine's been talking to. Lee, so Texas, we've had the great migration from China. It's hot. It seems like it's really on fire. You've been talking to the governor. You've been working a lot on this issue. What's going on in the world of Texas, and specifically the work you've been doing at your council regarding studying the impacts of Bitcoin and energy by the numbers?
Yeah, there's two different things that I think we need to consider, because politics, we were talking beforehand, cannot be divorced from policy, right?
True.
And when we look at the impact, Chad is really good about this at Riot. He runs the Windstone facility that
That's my
Riot
boy.
acquired. He's right there, talking about jobs, jobs, jobs. So Riot has done a great job of creating economic impact studies for Milam County, for Rockdale. We need to replicate that around the state and around the country, so that each office, Congressman Sessions, goes from not being very involved in this industry to extremely involved in a matter of 4 weeks. So very exciting to see that. But one of the most interesting things in Texas in particular is the energy piece. We have an incredible amount of stranded and wasted energy due to either grid congestion, power demand curves, negative price wind energy in West Texas, excess flare gas. Companies like Flaring Solutions, Giga Energy, many other companies are taking advantage of. And so that's the narrative piece. We got to win on the narrative, and we also got to win on the facts. And the facts piece is job creation, tax revenue. How do we amalgamate and anonymize? Because we don't want to, each miner doesn't need to be saying all of these facts publicly about themselves. We want to anonymize it so that their private information is protected. If you add it all together and anonymize it, then you can take that to the elected officials. And just as I said that politics can't be divorced from policy, this might be a good time to bring up the polling numbers that we see in Texas. We just commissioned a poll of likely voters in Texas, and on message, a political polling firm conducted it with a 2% margin of error. Bitcoin has a +10 favorability rating in Texas. 29% of Texans, Texas likely voters, own Bitcoin or crypto. And you see, we even did Bitcoin mining favorability polls. So Bitcoin mining had quite a few that don't know yet, so a lot of education that need to be done. But of those that have an opinion, there's still a 57% majority that are in favor of Bitcoin mining of those that have an opinion. Now, when you add a little piece of information and education into the question, so the very next question in the survey is, now that you know that Bitcoin mining is helping to increase grid resiliency, what is your opinion of Bitcoin mining? And you're at +10 12 at that point, favorability. And the last thing I'll bring up on the polling and voters and the politics of it is the younger audience that skews Democratic in Texas. We have, obviously Texas is a conservative state with Republicans leading the House, Senate, and the executive. But Democratic voters are actually more likely to own Bitcoin and have a plus 12 favorability, so a little bit higher than the plus 8 that the Republicans' average voter has in Texas. And then lastly, you have minority communities, plus 27 favorability for the African American community and plus 14 for the Hispanic community. So once you get those poll numbers and you can get them geographically constrained, because we were talking about this earlier, most representatives only care about the 700,000 people in their district, and senators obviously a little bit more than that, 36 million Texans for Senator Cruz and Cornyn. But giving them arming them with that nuanced data about their constituents is key.
So there was a little bit of discussion on legislation in New York. Do you want to talk a little bit about your experience there and what was happening around Bitcoin mining?
Yeah, sure. I can, and I think this goes back to the power of data. So we participated in a roundtable discussion with others focused on a couple bills that are coming out of New York. One is a moratorium bill, so it would put a 3-year moratorium on proof of work operations in the state. There was another study-only bill, and then a third bill sort of came onto the scene where it created a blockchain task force, and that is moving forward, or has momentum. And I think the point from the roundtable was when you have all players around the table having a discussion around this, data rises to the top as an anchor for those conversations, and it's really important for policymakers, to your point, who are really trying to distill what's fact, what's fiction, using that data, whether it's quantitative or qualitative, to build evidence-based policy. And so I think there's a lot of passion around the energy conversation and on both sides, but at the end of the day, if we're able to pivot to the data and use that to anchor our conversation in the policy, you're going to see a positive result. And just to put another point on this intersection between the policy and the politics, it's so true. Because, I mean, we see it in other policy battles that we're fighting in the Bitcoin world, but we need more allies at the state and the federal level, and I'd say internationally as well, so that you have a more informed body that is, debating these important decisions that will determine, is the U.S. the spot to be, or is it somewhere outside of the United States?
So there are 48 other states. So Christine, do you want to talk a little bit about some of the way you've been educating lawmakers about states that have other opportunities for them in the space?
Yeah, again, I think it just goes back to the storytelling of what matters to them. It's really important, right? Everyone has different regions in the US that they're focusing and have certain problems and certain demographics that they really cater their messaging to, because that's who live there and that's who they represent. But I think one of the big things about, in general, working on these issues is realizing that Bitcoin and Bitcoin mining is such a large industry. And from the outside looking in, you really cannot tell. But as it relates to Bitcoin mining specifically, it is such an industrial industry. We touch so many areas, not only in the US, but in the world. And a lot of people don't know that. Riot Blockchain, for example, we have employees in 5 states. We have 2 subsidiaries that are largely based in Colorado and Texas. We also purchase equipment and supplies from roughly 3 to 4 other countries. Understanding that that's just one company that's employing about, anywhere from 800 to 1,000 people, dependent on the subsidiaries and about what their role is as a contractor or a full-time employee. But these opportunities that we're providing and the down trickle effect of the economics in each community is what we need to be doing. And so I started taking that case study itself and going to these different representatives. And yes, we talk about Texas all the time, and we love being in Texas, and we love that Texas is so friendly to Bitcoin mining, but understanding that these other miners are also doing that. right? And we just need to educate and get out there and share this effect, because obviously some of us use some of the same suppliers for certain things, but clearly we can't use the same supplier for everything. So what are all of the states that Bitcoin mining is touching? You know, this industry is so large and people just don't realize it. So once you have those conversations with representatives and take the time to walk them through what it takes to run this type of operation, what it takes to, you know, choose a location and to work with, and looking for that green light from agencies, looking for that opportunity to build an opportunity for employing, you know, a variety of people in blue-collar jobs. This is no longer a tech type of opportunity that only the Silicon Valley and New York are blessed with. This is something that those rural, small states that have been left behind can become a part of. So for example, New Mexico is trying really hard to push Bitcoin and in general, you know, welcoming blockchain technology companies to come to their state. Louisiana, Arizona, Idaho, these states that before were never a part of the tech conversation. Alaska, my favorite state, they are obsessed. They have so much excess energy, and they're looking for ways to implement and bring Bitcoin and Bitcoin mining to Alaska. So I think in general, you know, I'm sure people in this room have traveled from all over, and you know exactly what your state has to offer, and you know exactly how to have that conversation with representatives. So need to tap in and work with us and other groups to really start having those conversations, because they need to hear from you.
Absolutely. So again, these are the experts, and they're used to, if you're not used to the Hill or talking to somebody in the White House, you have very, very limited time. You're sometimes lucky if you get the ear of somebody for 2 minutes. So we have 3 minutes left. I'm going to have each of our panelists 1 minute. We're going to play a game. We're going to imagine you have a chance to talk to President Biden in the White House. And you have Senator Elizabeth Warren on one side of the desk, and you have Senator Ted Cruz on the other. Go. Start with you, Joe.
I would say stop focusing on the immediate and look at the opportunity long term and how you can leverage Bitcoin mining to reach the renewable energy goals that I think both Senator Cruz and Senator Warren and also the administration are striving to achieve.
I would second that. We were with Senator Cruz just a few days ago in Houston, and he was asking about data, and you know, he's very interested in these renewable energy narratives. And so, but what I would say is the United States has an opportunity to lead, and we don't need to have, the states have this healthy co-opetition amongst themselves, but at the federal level, this is massively important. And if we want the US dollar to remain the world's reserve currency for decades to come, then the United States needs to embrace Bitcoin, not as a competitor to the dollar, but as a supplement, as a strategic reserve asset, similar to what gold was during the Bretton Woods era, that increases investor confidence and central bank confidence in the US financial position, increases demand for dollars overseas, because there is a strategic Bitcoin reserve in the United States and in the state of Texas as well.
All right. Justine, you have the last word.
I mean, I echo everything that you guys just said. I'd probably also say, Senator Warren, sorry for my tweets and campaigning against you for years. But in general, you know, I would definitely just talk to them about it being twofold. You know, my master's degree is in Homeland Security and Emergency Management, and it's a complete risk for the U.S. to fall behind in adopting Bitcoin and embracing it and letting this technology and industry flourish in America. And then on the other side, you know, for the Elizabeth Warrens of the world, it does exactly what they're looking for. It democratizes big tech. It brings the power back to people. It allows this opportunity for people who have been left out of financial opportunities in the past to have this inclusion opportunity and to grow ahead, to get ahead and to gain a store of wealth that they never had opportunity to before. So it really is something that not only empowers the people, but fixes a lot of the things that they initially had campaigned against when they first ran. So just remembering what those initial promises and mission was when they ran to represent the people, and how they have this opportunity, this beautiful opportunity in front of them to harness it.
Great. Well, that's all the time we have. Thank you all so much.
Bitdeer is the world's leading crypto mining platform with 3 business domains, Cloud Hash Rate, Miner Plus, and Data Center. We are excited to provide mining services to individuals, facilities, and institutions around the world. A simple, secure, and efficient mining solution is just one click away. Sign up now.
Really bright.
Wow, people are really leaving.
Even with
I guess the pool party is not as fun.
Pool party is over.
Yeah, pool party is just getting started though. Well, welcome to the pool party. I'm your moderator, Leo, and let's do a round of introduction.
My name is Nick Hansen. I'm the CEO of Luxor, which is probably the smallest pool on stage today, but it doesn't mean we have small hearts.
Hi, hello everyone. My name is Danny. It's good to see you all here.
I work for Poolin. Poolin is we started as a mining pool business in 2017 and quickly grow in scale. And right now we are also doing self-mining and hosting services. I lead the US business operation and development for mining pool service and miner retail and also hosting. And good to catch up with you all.
Hey, I'm Jay Beddick. I'm the PM for Foundry USA Pool, or product manager, sorry.
Hi, everyone. Is this working? Yeah?
No.
No? Hello? I'm Edward. I'm the Director of Business Development at Brains and Slush Pool. Yeah. That's me.
Can you guys hear him?
No.
Yeah, his mic is not working. And also the timer hasn't started yet, so I assume we're going to be here for 4 hours. Yeah.
Yes.
Okay,
There
here
we
we go.
go.
I got it now. Yeah, thank you. Yeah, I'm Edward Evenson. I'm the Director of Business Development at Brains and Slush Pool. Excuse the vocal fry. We had a bit of a night last night at Beefsteak, and it's catching up to me.
Yeah, so clearly the past year has been a very interesting year for the mining industry. I think there's a lot of changes in the distribution of the miners, especially ever since the China ban. So what are the biggest impact to your business on this front, and what are the things that you feel that you have to adapt to? What kind of new clients you're facing, and what kind of new demands you're seeing?
So collectively, the North American pools had to prepare for a large influx of new hash rate because it was all coming offline in China. Obviously, not great for our Chinese counterparts, but great for us. Foundry overtook the #1 position here as a result, and Luxor grew exponentially as well. We probably did over 20x our size from last year. And so, yeah, just getting ready for all of that new hash rate coming over to our way. And then that is, we also have a brokerage line as well, so getting ready for, all that influx of machinery coming across the pond. So.
Yeah, so definitely we agree with that. So last year has been an interesting year. A lot of black swan events happening, and you see the migration of hash rate not only from China, it's actually from also from KZ and from Ukraine and everywhere else. So the latest event with the Russian and Ukraine war has brought it to attention that there will be a growing awareness within the mining industry that people will start to realize that stability and security might be a bigger factor over cheaper electricity price, and that's why you see a lot of the miners are moving to the U.S. and the North American region. And the other thing that I want to bring up is that I have seen like a rise of concern for the environmental friendly and corporate social responsibility for the mining communities. And you have seen people actively reaching out, approaching for renewable energy. And also we have been in testing and experiment for the reuse of heat, the recycle of the mining heat. And that was some interesting thing I found. Yep.
Yeah, similar to Luxor, we sort of placed ourselves in front of that wave, and we prepped with. There's difference in culture between Chinese Bitcoin miners and North American Bitcoin miners, and we sort of prepared for that North American mindset. We've seen some good success from that, and for us, once China banned mining, as Nick said, just a wave of hash rate into the U.S. and we've been maintaining our servers and deploying as much as we can locally because stale share rate is really critical to every customer. And for us, it had been building this back end and then just getting frankly quite lucky that China banned it and being prepared for that onrush. Similarly on the energy front, Foundry does advising work as well, and we're certainly seeing more interest from those groups. But I think the better or the more interesting narrative, at least to me, is the flare gas capture and stuff like that, and that's becoming very big in the U.S. I think ESG has some connotations that I think we don't want to feed into that narrative, but it's definitely something that within the U.S. market and with mining in general, it's becoming more of a talking point. I don't know how much validity there is to it, but we'll keep providing good, clean data so that we can combat narratives.
Building on some of what Jay just mentioned in terms of the cultural difference, I had some experience with that because I had previously worked in China in Bitcoin mining before coming over to Brains and Slush Pool. they definitely handled things very differently. And so a lot of bringing over some of that hash rate from China to North America or any other respective region was sort of trying to smooth out that clash of cultures as much as possible. For example, in China, they were used to doing sort of a seasonal rotation for placing their hash rate in generally Xinjiang or Sichuan. This was based around the monsoon season or the rainy season. In Sichuan, probably more accurately call it rainy season, where you could essentially get an all-in hosting price of 3 to 3.3 cents per kilowatt hour, all in, no questions asked. And then in the dry season, get somewhere closer to 5 to 5.2. And the industry over there was very segmented. There wasn't a whole lot of vertical integration. So they went from that environment where everything was like very cut and dry, very cheap, very turnkey in a certain sense, and segmented, to being kind of thrown into the North American market, moving their machines, in which people were asking much higher rates for the electricity, asking for revenue or profit share agreements, which they at first kind of balked at and really weren't happy about, but then eventually kind of swallowed that tough pill and started adapting to the market. So it presented some pretty unique opportunities in terms of if you can help place that hash rate, naturally you're going to benefit from it by getting some on your pool, getting some on other software you're making, what have you. But it's also interesting kind of to see some of the larger miners from China coming over to North America immediately set their sights on going public. So you can see them sort of kind of overnight, so to speak, change the structure of their business and the way they're practicing Bitcoin mining on an operational level and like a regulatory level, which was pretty interesting.
Yeah, that's actually a really interesting point that you brought up. So, because in the past, up till 2020, the Chinese mining market is much more professionalized or much more mature, and now they're coming to interact with North American facilities, the energy market, as well as the capital markets. So, Danny, you probably have a lot of experience talking to Chinese miners, and I'm sure this is. It takes a lot of time for them to adjust as well. So what are some of the common sort of like questions or things that they couldn't really wrap their head around?
Yeah, so for the Chinese mining community, the last few years have been tough. So when they started, have after the crackdown, the first thing they have to worry about is whether they want to stay, to do it in the shadow, or they have to do it to other places like KZ or North American region. And besides the electricity price, the other thing that I mentioned about is stability and security. So are you willing to give up the control of your assets into a place where you have no resource, everything, you don't have direct control with the machines and stuff like that? So the willingness for you to take the risk of giving up the control of your miner was a really big thing. And the other thing is that when the Chinese mining community go into the US, they don't have direct contact, direct access to energy resources, and they don't know how the power system, the electricity system, the industry works in the U.S. For us, for pooling, we also do self-mining. So when we first moved into the U.S. and when we first moved to Texas, we actually did a lot of research on the deregulated market of Texas and how the ERCOT and how everything else works. It was a lot of research and learning, and luckily we pulled it off. And there are still some of the Chinese miners that suffer from, energy brokers that who just try to get a good share of a profit of it, and yeah, that's basically it.
So, do you see more, joint ventures of Chinese miners with existing hash power, working with, local companies and form some kind of profit-sharing business, or they just come here and spin up operation themselves?
Yeah, I would see a little chance for them to start themselves, but there will be a top-tier mining companies that originally from China that have been already established or is in development in the U.S. region or in the North American region. And for the other Chinese miners who has been suffer or who has still trying to see how the future opportunities, I think they will just partner up with the existing top-tier Chinese mining communities that have been already established in the U.S. For their business to mining.
So one of the biggest differences between Chinese miners and American miners is treasury management. It seems like most American miners really hold on to all that Bitcoin, where traditionally it seemed like most of the Chinese miners would at least liquidate at most their OPEX, if not everything. That does produce an interesting profile for Bitcoin miners here in the US. Initially, a Bitcoin miner is a play on power, but over time they build that asset class, or that reserve asset, and it starts to become more of a pure Bitcoin play. As the life of the miner goes on, it becomes it's very different from what we saw in China, at least. Denny, correct me if I'm wrong on there.
Yeah, definitely. And also, when the Chinese miners try to move their equipment to the US, there's 25% tariff. So to get that away is really hard. So some of them will decide to liquidate their assets and try to get a new order and move it to the US.
Yeah, so one thing that's interesting about hash power moving to US is that a lot of institutional grade players with very sophisticated understanding of capital markets are coming to play as well. We see a lot of companies going public. We see a lot of companies with doing private loans. So from mining pools perspective, what do you see are the biggest changes of dealing with this type of institutional clients versus in the past, most miners are just anonymous operations?
You want to take that one, Jay?
Yeah, so Foundry is fairly well known for being a financier of mining machines, and it's something that that's how Foundry started, focused strictly on that part of the business. And a lot of it was focused within North America, bringing those machines from China. This is pre-ban, over here to set up shop, leverage the skill set of the early team on that. And again, it was really tailored to that American mindset, which is a little bit more institutionally focused. So that was the start of the business and actually led to the pool, right? Okay, well, we have all this hash rate that's coming in. We had a lot of hash rate ourselves as self-mining. So we're like, well, why are we paying somebody else fees when we can build it ourselves? We decided to stand that up. And then now, our service offering on the proof of work side is, full stack. So if you need financing, we can do that. If you need pool. We also partner with our sister company, Genesis, to offer all sorts of fun financing layers on top of your either hash rate or your Bitcoin itself. And so, as Nick said with the treasury management, that's come much more to the fore, especially for the American miner, North American miner.
Yeah, mining pool is one of the oldest business around, and this is a pretty well understood business as well. So it was also very clear that at this point of the development of the mining market, most people come and they want additional value-add services, right? Like Foundry is doing exceptionally well on that front. So what are some of the interesting value-add services that you're exploring and you think that miners are interested in and they have a dire need to address and can be easily done through this existing relationship with your mining pool?
I kind of want to flip that back to you and learn a little bit more about what you're doing on the hash rate derivative side, but we'll save that for later.
I'm the moderator, by the way, so I'm off limit.
So with Genesis, they pretty much offer any service you could want, with your Bitcoin. So as simple as custody, as complex as some, more bespoke derivatives. There's also methods to earn yield on your Bitcoin via Genesis lending, which some folks have taken advantage of. So it is interesting, like Nick said, the Chinese mining culture was very much like, we got to get the OPEX, we got to cover costs. Here, folks really do want to hold on to it, especially when you're reporting publicly, if you're publicly traded. You want to talk about your Bitcoin treasury, and so this offers a way to earn yield on top of that seems to be very exciting, and we're seeing a lot of traction.
I think there's, it really just depends on the company. I feel like the kind of ancillary services that developed around mining pools are fairly limited. It's just kind of like what you want to specialize in and what kind of syncs up with your pool business the best. There's the financial services that Jay mentioned that Foundry does. We don't offer too much in the way of treasury management. I mean, our Slush Pool's treasury management strategy has been just selling as little Bitcoin as possible since we opened the last 12 years. It's worked out well so far. And we're a company of developers, so we just went all in on software with firmware, basically, and like changing the narratives around that and helping some of the larger institutional miners understand how it can specifically help their operations, especially since hash rate is kind of directly reflected in share price in the public market. So if you can increase that hash rate with zero upfront capex, then they like it. And then you have like other people that are dealing in infrastructure. brokerage, helping their miners get a hold of machines cheaper than they would in other places. Maybe they don't have the size or capital to have a good relationship, a good enough relationship, I should say, with Bitmain or MicroBT to get the favorable terms they want. And also they can, not only sell you those ASICs or Bitcoin mining devices, they can help you put them on racks as well, and which also just lets you kind of funnel them into your pool service.
Yeah. So I can touch on that. So mining pools are actually a very terrible business, and at this point, they're not really even a business anymore. It's more of like a feature of an overall ecosystem. You don't really build a mining pool to go make money. You build a mining pool to service your ecosystem of customers. You add it as a feature, and then from there you generate services that are actually valuable to them. Brokerage, lending, financial products, derivatives. I think derivatives are going to be really, really important over the next probably 10 years even. I think that's like, we're very much in the nation stages. We've got DeFi protocols building on it. We've got people doing bespoke, bilateral agreements. There's, Luxor's working on an exchange. These sorts of things are all coming to the marketplace, but they're all predicated by having a mining pool. So that's one of the reasons we built one and really want to have that. Long term, I think that, again, the mining pool is just a feature, and you have to work your way up and down the stack. So you can go down into firmware, actually management software for the whole for your whole co-location. So running a facility with 50,000 machines in it actually requires quite a lot of coordination between between all of the different working pieces, your switchgear, all of the things that happen inside of a facility, and then that's all working down towards the plug, and then you've got even power management and things like that. And then working away from the plug into financial services. So, mining pools just a feature at this point.
Yeah, if mining pools are doing their job right, they're unnoticeable, they're invisible. You don't even realize they're there. But as soon as something goes wrong, is when you start interacting generally with the pool provider. Yeah. So it's not really a solid place to build the whole business off of. As Nick said, it's just kind of something that sweetens the pot.
Yeah, when you said interacting, that's a very, very nice way of describing what happens when a mining pool goes down. You're not very much interacting with your mining pool at that point. You're very much yelling at them.
I used to do account management, so I'm well prepared for that. And also, just like Nick said, so mining pool is, it's not like the profit margin for mining pool is really low. So it's more like a way for us to make friends, to build a connection. And also, like Albert said, that it depends on how you specialize it. So for pooling, we have, since the hash rate migration, we have been more diversified in terms of hash rate distribution and in terms of our customer portfolio. And now we're more like a global mining pool. Before we have a large concentration of hash power from China, but right now there's only a small fraction of it. And many of them are coming from the US, are coming from Southeast Asia and some other European countries. And for us, on one hand, we're trying to do, as we get more and more the different customers from different regions with different types of customers, we started exploring the features that to meet their demand. So, for example, we have something like profit share, earning split, which means that for a joint venture or partnership program, you can distribute your profit by percentage or by amount daily. And also, on the other hand, we're trying to be more vertically integrated as possible. So we have, being able to self-mining and doing hosting and miner retail, we'll be able to, have the miner purchase, hosting, mining pool, and also asset custody, and also financial services in the future to be a more integrated one-stop mining solutions.
Yeah, there are a lot of good points there. So I wanted to just touch on a few specific nuanced point there. It's very obvious that mining pool operations are no longer should not be known as just a mining pool operation and should be just part of a much larger stack, right? So, for instance, Foundry is a mining financing company, and mining pool is part of it. And for Slush, it's a firmware. So you offer like optimization services, and mining pool is part of it. So what are some of the vectors that you're actively pursuing? What are some of the metrics that you're in other part of the stack you're pursuing to maximize profit for your operation?
I mean, for us, miner uptime is really important, and so for our pool, part of it was we wanted to have some control over that because we use FPPS, And so we wanted to make sure that we could have stable, consistent payouts. And that's a really good metric for us as a financing company, because if we're offering folks access to these machines, that's the only collateral. And if they're not plugged in, or they're not working right, or they're not getting payouts, that means we risk a default there. So we want to make sure that we covered that. And so we focused our pool on a lot of stability focus, and that was really key for us. And we still see the benefits of that today, even though we have expanded the pool beyond our financing clients and stuff like that. It's helpful to have that uptime, especially in an FPPS environment, where that counts. Every hash counts.
We approach similarly miner uptime, but it's kind of in a different approach. So whether it be how you build out the infrastructure, like certain parts of your aisles can get really hot in mining while others are cooler, how making the software make those miners that run hot and maybe constantly rebooting run a little bit more cooler and efficiently while the rest are business as usual. Basically everything is centered around producing as much hash rate as possible for every watt of energy consumed on our software stack. There was another thing too that I'm trying to blank on.
All right, Ed,
I'm losing it. It's
I
all
got you
you
covered
now.
here. So we actually take a little bit different approach. So we obviously, mining pools, you have to have good uptime. If you have even a few minutes of downtime, that becomes a very big issue for your customers. But we think that there's another, we can actually get value for you by offering good rates on brokerage. So we can actually, you make an upfront payment that saves you a couple $100,000 on the machine purchase price. That ends up paying your pool fee forever. So it's a really nice way for us to, we can save money up front, big extra cost up front. So we try to do that. And then also software services all over the place. So really tight integrations. We do tight integrations with all the tax reporting software, which is really handy, especially for your hobby miner, figuring out how to report all this stuff as income. So we integrate with TaxBit, Coinly, all the tax softwares that are out there today. That's something that we liked a lot. Also try to provide really robust APIs for you to monitor, integrate with Blockwatcher and all these other guys that do mobile app management, that sort of thing. Foreman, they work with our APIs really well for managing fleets of deployments. So basically just giving you all the building blocks and the pieces to put together a really robust mining operation.
The last thing I wanted to mention was flexibility and choice. So the software that is shipped with the devices from the manufacturer doesn't really give you any flexibility or choice in terms of customizing your mining operations, whether you're mining in super harsh environments, whether you want to submerge them in dielectric fluid to keep them more cool and overclock them, what have you. There's 1,000 different things, a controllable load resource, et cetera. So I don't know how you would kind of classify it as a metric, but just making sure that miners have as much flexibility and choice as possible.
Yeah, so for us, one thing is we value productivity really the most. And so for that, we have features like earning with mining with interest to help you to have an extra earning, and also we're doing a detailed display on our mining platform to let people see the detailed performance of the miners. The other thing is that we have been having an active increasing concern of network security. So we have developed a mining pool network protocol called pooling proxy, which is help to enhance, to improve the network bandwidth and also to improve the security of the system.
Yeah, so also along with these institutional players, right? Some of them, they like to white label existing pool services to run their own pool. So why do institutions want to do that? What are their considerations there versus plugging into existing pool?
Yeah, so there's a lot of brand value there. So mining your own blocks is really important. If you can mine your own blocks, that adds a lot of value to your brand, and I think that's one of the biggest ones. Also, you can market that to the market and say, look, I've got this software stack that allow, obviously I now control more portions of the overall mining ecosystem. So if you're a big miner or a consortium of miners, it makes a ton of sense for you to have your own mining pool. Something Luxor does a lot of, actually.
Yeah, I think it really depends on the type of pools that they want to do. Sometimes one way they can do a proxy pool, and the other way they can develop a mining pool themselves. The thing is that I think the problem is that people has to be more educated about the mining pool business. It's not easy to do a mining pool, and many of us have talked with Ivor the other day. So if you are doing LPPS, the full paper share, you have to take the risk of luck. And if you don't have a bunch of hash rate, or you don't have a bunch of funding ready to be as a security, that would be a really tricky problem for you to do it. And yeah, I have been seeing that for a while. This has been a trend in the last a year or so. Have been many institutions reaching out to us about doing a proxy for something like that. I mean, yeah, it's one thing it's good for the brand image. The other thing is that they have a chance to be more, independent and to be more able to, to do their own block signature, stuff like that. Yep.
Sorry, no, go ahead.
Do you think ESG and also permission, KYC, ML is part of the concern for these institutions as well, that they choose to white label their own pool? Is that part of the conversation?
Yeah, I mean, we saw that with another pool where they were going so far as to put, nasty words into the block signature about OFAC compliance and stuff like that. I do think that that's probably going to continue to be a concern. There are other pools that are focused on more that ESG narrative, and that's, it's an open market, free market. Let them do what they'd like. I do think, right now with the way Stratum currently works, it's the pool who sets the block template and includes the transactions or what have you. That could lead to a risk where things can get, censored and stuff like that because they didn't follow whatever prescriptive guidance there. So that's something that I think we'll probably see more of that as people are trying to figure it out and, appease, regulators in their head about what they're doing. But I also think it's really important that, things like Stratum v2 and other solutions to minimize the risk that a pool can censor transactions for its miners. It's a dangerous game.
There's the ESG point you also brought up, Leo. Ever since I got into mining pools, it seems like every other week someone's contacting me to see if they can make their own pool or we can white label them a pool. The most recent trend of this has been for green pools, which, obviously became more popular as ESG started to dominate the popular narrative a lot more in mining. To me, this never made much sense just because of how mining works. At the pool level, that's not what determines whether you're meeting ESG requirements. Pools themselves actually consume very little energy overall, and it just makes so much more sense to me to have that accountability if you do want to participate in that system on the miner level. Because if you're the miner consuming all the energy, it makes sense for you to disclose that energy mix if you are interested in getting qualifying for certain ESG advantages. Yeah. But this idea of a green mining pool seemed sort of strange to me because it doesn't feel like, to me anyways, if you understand how Bitcoin mining works and how the block reward is distributed and where the energy is actually being consumed, it doesn't actually contribute to that ESG narrative at all. It seems more like a marketing thing.
Yeah, the green pools, I know of 2 that are currently running, probably 2 or 3 more that are coming maybe online over the course of the next year. The idea is more about accounting because they can, you really need the units of account which a pool provides you. A reason somebody may want to run their own pool is they can manage and own every piece of data from end to end. So, miners produce something called a share, and every miner produces a share every 2-ish seconds. Those things are all units of account. And so if you had your own pool, you could keep that entire share log and have access to that. And so you could verify this share came from this IP address, which has been validated by some green entity to determine that that facility is green, which is kind of the idea. Like you said, free market, do what you want. But that's kind of what they're using it for, and that's why this green pool narrative has come about. Back to the OFAC point, that was also the market seemed to indicate that maybe an OFAC compliant pool would be beneficial. I think the market quickly determined that was not the case, and so it switched back to being pretty much a normal pool at that point. But yeah, these are all very interesting niche reasons why somebody might want their own pool. They have their own reasons, their own initiatives, whether it's owning the data, owning the coins, owning the coin base, all that stuff is a reason somebody might want to build their own pool or license one of our pools to do their own mining.
Yeah, the OFAC point is very interesting because it was a big topic just several months ago, actually 6 months ago, lost track of time. But it didn't get much traction afterwards. So what has changed? Is it, because we're clearly seeing regulatory conversations heating up. And this is definitely not something that they're just going to walk away and give up. So what are type of regulatory conversations that you guys are having? And also, where do you think that this is going to go?
So the idea of like an OFAC pool is kind of silly because you're really, okay, so if anybody doesn't know what an OFAC pool is, it basically means like transactions that go from, from like a drug lord or some sanctioned country are not included in your block templates that you mine, so they don't get included in your blocks, but then they would just get included in the next one. So the idea is like kind of silly that it would be, that's the idea. Now from a regulatory perspective, really, you just have to, like in the US, you really just have to be careful about your proper reporting. So in some cases, you may need to report, on your customers, but there are thresholds, and you can get a legal opinion as to how high those thresholds need to be. We try to make it very, very low or very, very high, so that you don't really break. Most regular miners aren't going to break through that wall.
Yeah, same. So I think the most important thing for mining pool to be in terms of regulatory issues is that you have to be fully legal. So there's only two things that you cannot avoid. One thing is DEX, the other thing is tax. So you have to pay your taxes for that.
Yeah, and back to the block template thing there, like by participating in the Bitcoin mining network, right? If you put a block on top of another one, you are securing every transaction beneath that. So if the purpose of this OFAC ban was to like stop and not provide material support to these bad actors, just by participating in Bitcoin mining, you're providing better security to their original transaction. So it's like, I don't think regulators, or the folks who were trying to think like regulators thought that one fully through. But yeah, again, when it comes to, the dangers of centralized services, right? Like there is a risk there of, we've got a target on our back, we need to behave, otherwise, we get dinged, right? Like we're a US entity, we want to play nice, we like the US, we like living here. So, it's one of those things. But again, there's complying with the laws and making sure that you are not a bad actor. That's like really, really important. But then over compliance will just lead to that sort of more negative outcome. So it's right now, a lot of what we're doing is a lot of educating of politicians to help them understand, right? Like at the end of the day, we all want to live in a safe and happy place. So I don't think anyone wants to dock customers or anything like that, but it's about educating how it works, because a lot of people still seem to think that Bitcoin mining is very dirty, and Bitcoin itself is like for criminals and all that silly narrative there. So it's not for criminals. Just to be clear.
Yeah, Jay sort of just highlighted the two narratives. At first, it was Bitcoin is funding terrorists and drug cartels and criminals, and more recently, at least in the context of regulatory conversations and frameworks, it's now Bitcoin is boiling the oceans. Bitcoin is bad for the environment. And it's, if you have any level of experience or knowledge of Bitcoin mining, it's pretty easy to tell that they're very uneducated on the subject. So education is going to be a very important part. Otherwise, the regulation will either, one, not do anything, and then that will quickly be overly burdensome to the industry and go way too far. The example I always bring up is when the good Senator Elizabeth Warren always uses the metric of the amount of energy it would take to per transaction, which is just a ridiculous metric, right? Like if the Bitcoin network used half as much energy, it could still process as many transactions. It's just not really valid. So like making sure that we step away from those sort of ridiculous talking points and helping them understand kind of some of the points that Jay mentioned, that there's some things just by participating in the Bitcoin mining network, you're securing all the previous transactions, so some things are inescapable in that sense. And just making sure that there's enough room for this kind of burgeoning industry, which is now just exploding, I wouldn't even call it burgeoning anymore, to continue to grow, and for the US not to provide a regulatory framework that would lead to some of the stuff we've seen in Kazakhstan or China previously.
Yeah, I think the conversation with regulators, the education process, it would probably never stop, and they will always find new things to attack. But the good thing is the Bitcoin community has grown so much, right? Bitcoin mining community has grown so much since, I mean, we're all kind of old here, but since 2017 when we first looked at this, it was such a tiny little community. But I think there's a lot more money, there's a lot more interest aligned to push for more friendly regulatory environment. So hopefully that will play out nicely over the next couple years. So we have about 4 minutes left. Let's just do a concluding remark. So what are some of the most exciting developments you see in the mining pool or mining pool related business, whether it's technology related, whether it's optimization, or whether it's just tangential businesses?
I, for one, am a big fan of Stratum V2. I really like to see the ability for miners to be able to select their own transactions and put them into their own block template.
Yeah, one thing that is really interesting and exciting is that as many of the hash rate has moving from labor-intensive country to capital-intensive country, you will see a large trend or potential in technology development for the automation for Bitcoin mining operations. So that's what I'm expecting for the future. And also, we've been promoting Taproot activation for a while, and that was also exciting. We value the customers' security and privacy very the most. And also we have been really looking to strengthen V2. Shout out to Slash and Brains. And yeah, that's basically it.
Yeah. No surprise, Stratum V2 is I'm pretty excited about that. I'm also pretty excited about Leo's tweet from yesterday after the Taro announcement, so we'll see what comes from that. So I'm excited to learn more about that. And then I'm also really excited for Brains to release their Whatsminer M30 series firmware.
Soon.
2 weeks.
While I would like to believe that there's just a bunch of Stratum V2 fanboys on stage, I think what that sort of highlights is that there isn't a whole lot of new stuff on the horizon for mining pools. They've been pretty much doing the same thing they've always done since they came out back in 2010. And I don't see that changing anytime soon. But if we're just talking about maybe like adjacent to mining pools, and like, so I don't have to talk about Stratum V2 as the next generation upgraded mining protocol, there's something like fee markets that seem pretty interesting to me. There's already talk, and it's probably already happened, between like sort of backdoor deals where exchanges want to be able to process transactions during major liquidity events, and so they want to pre-purchase some block space in order to reserve some room for their transactions. Instead of this remaining behind closed doors, to have like sort of open, transparent fee markets would be super cool. I'm excited to see something like that develop, and there's a couple people in the space already working on it. And then inevitably, pools are going to be, I think, the main infrastructure for what will turn into hash rate markets, which I think will be super exciting.
Yeah, absolutely. Actually, the fee market point really should have brought up 20 minutes ago. I think this is going to be a very interesting development, and mining pool is absolutely on the frontier of this business, right? Especially as we go into more heavy events, this part will become much more, the granularity around the games on fee market is going to be more and more obvious. So I think that part is definitely going to be a big conversation. The next year when we come here, we'll spend the 40 minutes talking about fee market.
So we can actually look to one of our favorite, the secondary chains. They have a very robust fee market, and I think that as DeFi gets built into Bitcoin, I don't know how DeFi is going to get built into Bitcoin or who's going to make it happen, but when DeFi comes to Bitcoin, it's going to change mining significantly. Mining will be far more dynamic and a lot less static than it is right now. That's not much a good thing, but it is going to happen, certainly.
Yeah, so that's all for today, and thank you for securing the Bitcoin network.
All right, thanks everyone.